recently said that this is the lowest amount of businesses ever started in the
Oh, I would say this is the highest amount of business that's ever started. Yeah, from a startup perspective, because there's so much money easily printed at the top, and then it flows down, trickle down economics to all these.
This generation doesn't want to start businesses.
The millennial generation is, he's saying, the millennial generation is not making use of their money for the startup economy.
Yeah.
Sure.
It's just great, yeah. But I'm sure this time generally there's quite a lot of startups going on.
Yeah, yeah.
Like, it's probably started by other generations, not the millennial generation.
Yeah. If you could not squeak so much, I'm sorry, man. I'm like, oh damn. Yeah. Sorry guys. So I was just talking to Aaron. You guys are still early, so we're just chit chatting. I started the recorder, and we'll start a little bit early and hang out right now. But he just he just asked me like some personal questions, like what am I doing with all this, and how am I shifting it? And I was just telling him like truly this investment club really started off as just an investment club. It was just my own personal desire to maybe even get back at Morgan Stanley for not letting me trade for like a whole year, right? Being under the national broker dealer. But the moment I left, I'm like, screw this. I'm gonna go start an investment club and never look back. Right? I didn't really stop. Like I treated every Sunday like it was my business, right? And so things progressed. I learned a lot of new things. I learned a lot about Silicon Valley because at the time when I started, all I knew was like stock market analysis, heavily on technical analysis, decent on fundamentals. But just after teaching, learning about everything, meeting people like SK, and like the adventures that he brought me as well, right? The whole mixers kind of started. Meeting people from around the world, from Switzerland to Saudi Arabia to Singapore and all that, and just sitting down, hearing what their views are on life. I would say that my position, hosting these events, I get to see a very unique perspective of Silicon Valley, of life, of the different demographics, of the different technological careers that exist out there, or industries, everything from semiconductors to software, right, to even solar panels and stuff like that, which we'll talk a little bit about today on one of the securities. Yeah, it gave me a very unique view, and I know you're still on the younger side. You're 25, you said. Something I learned along the way as well is as you age, people around you change, and also yourself change, right? You start to develop, maybe good habits, bad habits, or a value system for yourself, or the people you want to be around. So this club is always changing, right? And I think the mindset that I originally started this investment club with was more on the side of just with the limited knowledge I know, right? So today I would argue even that I know a lot more than I did when I started. Way more about Silicon Valley, about venture capital, about private equity, about commercial real estate. We do talk about commercial real estate in here. I don't talk about it too much because at the end of the day, it's like a boring stock. Because the cash flow is it's like any other stock for commercial real estate. It's just the cash flow is very predictable and the numbers are like the same. So I get more of a kick out of analyzing software stocks because it's so trendy and uncertain in a way. I'm just gonna mute somebody real quick. So yeah, just like all these interactions, meeting people, it really made me want to evolve this investment club to be a more modern investment club, but then also talking about global macro and the demographics and the reality of the different generations that are struggling out there. Because as millennials, as a millennial, you're like, oh, it's really hard to survive, right? Well, as a baby boomer, likewise, because they can't really exit their position without finding a cheaper property to sustain a nice lifestyle, right? Because if you imagine your retirement as a baby boomer, you'd be like, oh, I want to retire into a bigger home. But in the valley, you can't. So they actually retire out of the valley, right? So it's actually hard on everyone. And I have a more intuitive understanding of this because I, analyze the global macro picture of things. And it's just like, wow, like they really are creating a more massive wealth inequality. And I'm not gonna lie, I think maybe the past 6 months I got more in touch with my human side, Like it's just like the humanity side, or understanding, like money was the initial motivation in this investment club, but over time now it's become not the motivation anymore. It's really become like, wow, like it's about relationships, about what you do for people, your own personal value system, your credibility, your reputation. So because I know all that now, when I didn't know it before, I want to protect that because it took me 2 years or 3 years almost now to kind of build all this, right? So I'm not gonna like hurt my own reputation by just doing something shady. And then you also want to understand like the laws of economics too, meaning like everyone is like always thinking like, I want this lifestyle, you know, I want this big home, nice car, whatever, but they don't think about the work, the input that is required for that output, right? It's very mathematical if you think about it. So, hey guys,
Hey.
heard your voice though, kind of new. Hey, welcome.
We
So,
got a new guest.
sure, welcome. We're just kind of getting started here. We're just chit-chatting. So, yeah, I learned a lot, man. I feel like I derived like a ton of wisdom because as someone at my age, right, and I'm talking to people in here who are coming in and they're asking for my advice, but they're like double my age. It kind of teaches me a lot too. It teaches me to be maybe more wise in a short period of time, but also like it also teaches me like, like about the paths that they took, and maybe I wouldn't want to take this path, right? So how you see me today, I think you've been here for like a year now, maybe, I don't know, but you see like my thinking kind of pretty much it became more optimized.
Yeah.
Like I'm not going to do something that is not beneficial to the resources I have, the limited resources I have, which is like time and maybe money, right? So yeah, in a nutshell, you heard what I said. Why am I doing all this and stuff? Dude, it's just evolving the thinking, and it's also serving that loneliness feeling as you get a little bit smarter, I feel. Yeah, because you should watch this one movie. It's a comedy. It's not that great of a comedy in my opinion, but the movie's it's called Idiocracy.
Oh, that's a great film.
Do you like that one? I'm not trying to sound arrogant or anything, but you know, teaching, interacting with on average 300 to 400 people monthly. I don't know if you noticed, but in the past, I was counting the numbers yesterday, and I was talking to Barath, and I was like, dude, like I thought I was meeting 200 people every month, and then I recalculated the number. It was actually 300 to 400, and so this is from like from around the world and stuff too, because they come to the mixers and stuff. Yeah, like I feel pretty confident about the average rate of intelligence among the population, right? Like the level that they're thinking about. The average person is actually a consumer, a net consumer than a producer, right? The average person, I'd say, is also they expend more than they save, right? They're net expense versus net savers. So not everyone's an investor, right? And so getting deeper into the philosophical nature of money as well. We talk a lot about money in here, or trading, or stocks, or whatever. Money is actually, I was talking to Raj about this, he's not in here yet, but Raj Sharma in the back, he usually sits in the back. Money is actually it's artificial to us humans. Money is a socially engineered product, right?
Yeah.
But what is nature? It's not nature to us, trading is nature to us. Isn't that funny? Like we historically, ancient times, like I'll trade, if someone's in the car listening, that's pretty cool. Yeah. So I'll trade my cow for your chicken.
Yeah,
you know?
absolutely.
How are you?
Hey, good morning, man. I was just telling them about what I messaged you, the whole, money is not nature to us, but this whole world is built off of the foundation of us behaving off of money, right? But nature is really trading, because we've always done that when we existed on this planet. So yeah, so you see the broad spectrum of where I started, where I am now, my level of thinking, how I evolved, the move away from money more towards humanity and building my own robust value system, but also appreciating the community that's being developed and not disrespecting the audience or the community. Dude, you learn a lot, man. You learn a lot. So I challenge anyone to, if you want to take it to the next level in life, one is definitely build a network or community, because you start to see things that books might not. I mean, even someone like me, let's say I write a book about communities, it's an experience that you would probably want to, try to go for versus reading about it, because you could read about it, but nowhere would you really appreciate it. I was talking to a buddy this week, and he was saying like, he has a lot of friends. His father is one of his friends is the father is the CEO of Guess. So Guess, the apparel company.
Yeah.
And he was telling me that. I'm sorry. So he knows a friend who knows the CEO, whose friend is the dad is the CEO of Guess. And so these kids are like extremely wealthy, right? They're more than ultra high net worth. They're like maybe 50 million plus. And because these kids are kind of golden spoon fed, they can't really appreciate the things in front of them. And so they're constantly doing drugs and seeking like further excitement, right? And I was telling him like, there's probably a component missing, which is the hard work, the sweat equity of building something and appreciating it, right? Because they just kind of got that life handed to them and didn't know how to really take care of it. So my heart always goes out to people who are hardworking, who put in the effort, who are disciplined, who have the willpower, who have the ambition and all that. I personally am deeply inspired by that, not so much by people with deep pockets anymore. So that's one of the lessons I've learned from teaching this class. Teaching about money, being so capitalistic in the beginning, to now being more relationship driven or human driven or whatever. Shoot, it's 10 o'clock. Should we get started or should I give it like 5 more minutes? We kind of started already. It just started with Aaron asking me like, where am I going with the community and stuff like that. Did you guys have any questions or?
How was Friday?
Well, I had to cut my heavy silver position on Friday. All right, but I'm not too, or I wouldn't say too, I'm not really emotional about it. It's just kind of like, this is normal, this is part of trading, you just got to clean it up and carry on. Right?
I meant the networking mixer.
Oh, the networking mixer. Yeah. Okay, all right, so I had my mind on trading. The networking mixer this time around was not my best. It was, by everyone else's standard, good, but it wasn't great from a K standard, right? So we had a good amount. I think it was about 50 to 60, would you say?
40, 50.
Yeah, so I normally anticipate, I'd like to hit 80 minimum. So this is the typical time frame in the year where it kind of tapers out, right? So I know when October, September, so when November comes, it's like no one, because everyone's on vacation. So this is a cyclical nature of kind of running a meetup, right? It's almost like running a business. You gotta know when you want to double down on the money, the budget to do the marketing or whatever source business. So it wasn't bad. It was just another session. To me, it was another day because it's mixer number 18, right? So
Maybe it was the full moon. Maybe that was.
It was a full moon.
That's what caused it.
No, I mean it wasn't bad. It was a good amount of people.
Probably it was Friday the 13th.
Yeah. I know. So that really actually haunted me. I was like, you know what? I'm gonna take the leap and host it on Friday the 13th. It was the hottest Friday the 13th ever, and I was like, oh, was there like traffic or something? Because usually before, so at 6 p.m. right? Before 6 p.m. there's a line. Usually, and I'm like, it's 6 p.m. Where's the line? But the audience actually came in later, so I'll probably never host on Friday the 13th again. As a lesson, maybe I'll take that on as like a business lesson as well.
Maybe.
Well, it's a combination of Friday the 13th and a full moon, so
Right.
Yeah.
stay away from both of them.
Yeah. I was being too arrogant of that concept, so it's pretty funny. So that was Friday. To me, is again, I try not to be emotional about the markets. So going back to some of the key wisdom that I could share with you, right? You can't predict the markets. Right? Let's just be real. And every billionaire, hedge fund, money manager, they can't predict the markets. But you can predict yourself. Right? So if you can't predict the markets, you could predict yourself, then you have to manage your actions, your activities. So if you think about how I operate this community, I can't predict how many people are coming out, right? Like, I mean, on the meetup, it says like 20 people, but this is more than 20 people. So I guess there's word of mouth or whatever, but people don't register and come, right? So I can't predict that. But I can predict myself, so I focus very heavily on the quantitative efforts that I have on my end. So for those of you who don't know, I run 6 events a month. That's my quantitative pulse on the market. So I can't predict the crowd, right? Is that chair okay? Oh, so I can't predict the crowd, right? But I just run, all I know is that every Sunday I'm going to run 1 lecture, so that's 4 lectures a month, and every 2 weeks I'm going to run a mixer. So that's my quantitative model that I'm applying to the markets, which are uncertain, right? So if I'm repeating the same model over and over, then I have that consistent pulse on the market, and the market will just feed me that data, and I'll see like, oh, okay, this month the market slowed down, and oh, Friday the 13th, never again. So stuff like that. I suggest everyone kind of develop that sort of thinking as well. Develop a quantitative model on your success. A lot of like the self-development motivational speaker, right? This is not a motivational speaker club, it's an investment club, but some people come in here for the motivation more than investment probably. What? You're talking about investments? I'm here for the motivation. But pretty funny, right? I don't know. But yeah, so if you read a lot of these self-development books, they talk about, you know, it's mostly sales content to kind of get you ready for business. But to me, it's like after reading it at a young age. Sorry, I'm gonna mute somebody. I just realized like, well, mathematics is superior than emotional thought. So a lot of the self-development stuff is like tell yourself positive affirmations every day and all that. Be positive, help people, whatever. But now I just purely believe in quantitative mathematics, where my reactions are just going to be based off this model and then see what the market gives me in terms of feedback. So I don't know if that was like a good start to today, but I figured, why not? Any other questions before I jump into it?
I got a quick one.
Sure.
So you've got two meetup groups happening at the same time.
I have-
Volatility and
I have
stocks.
like 13, and we were just talking this morning about acquiring another one with like 555 members. And I told my partner like, hey man, wait, you know, you want to deploy more money? Because I don't pay for these meetups. I have a partner who does. They sponsor me. And I'm like, you want to, you know, bring on more meetups? We'll grow the community, but you sure the ROI makes sense? Like, are you, because if you take on a meetup, right, I think you have to put a lot of love into the meetup. Meaning you can't just take it, restructure it a little bit, and people will come. You actually have to really redesign it, renovate it, engage with people, nurture the people that come in. So I told him like, hey, you know, I think you're trigger finger, you're trigger happy on this, but we need to know if it makes sense. And he just replied to me right now. Let's see what he said. He said, the Christian Entrepreneurs Group may be a little unique though, so up to you and your comfort level. Okay. So he said, okay, I'm on board. So he wants me to acquire.
Why are there two overlapping meetings?
So the issue is that if you guys know Meetup.com is owned by WeWork now. Prior to that acquisition, it was you were able to consolidate them.
Oh.
Right? And so now then that they don't allow that, but then they're milking money from us because we have to pay for each meetup.
For both.
Right? And then if you understand Meetup as well, this meetup today is about 916 people, members. It takes about 1 year of, okay, this is what I did every Sunday. My quantitative pulse on the market. 1 year for every Sunday, I've only built up 350 members. Right? Now it's 3 years, well, 2 years and 8, 9 months, whatever, and it's 916 members. So you see the sweat equity it takes to build up a meetup. Mm-hmm. Now, I had another one, it's called Stocks All Day, which is where you kind of found it, right? One's called Volatility Club, the other one's called Stocks All Day.
Right.
That one was called like San Jose Stock Market Meetup. So I took it over when it was just 300 people. And then I revamped it and called it Stocks All Day, right? Just something catchy in the mind and stuff. And then now that meetup went parabolic and hit 800 members in less than a year, maybe less than 2 years. So that taught me from a market feedback, because I applied a A/B testing on the market. I did Volatility Club and then I did Stocks All Day. I realized that the name is really important because it's the friction. A name is the friction that your network, or you're in marketing, so you kind of know this, right? A name is I think it's a very serious thing when you want to come up with your company name, because it will serve as the friction that goes between the crowds.
Sure.
And how people remember you.
The only thing is, I was, like Bernard was saying, just it sounds like it'd be easy to combine them, and I understand where
Yeah.
Wix is coming from because they can get double the fee,
Yeah.
double the advertising.
Yeah.
But it's easy enough for you to say, all right, this is closing in a year. Sign up with the other one, and then just
Sure.
incrementally.
I have a partner who thinks different, so I mean he's the one paying for it. So I'm just I'm just the community runner. At the end of the day, I don't want to be a salesperson. I just want to be a true and genuine person to the audience. Because I mean, some salespeople, they're just focused. They're very transactional focused. You know, it's like, oh, okay, we're done with the transaction. See you later. I'm gonna go to the next transaction. But I think that's a pretty sour way of like looking at life. I want to focus more on like community and genuine relationships. And that, in a sense, could build you a lifelong transaction, not a one-time spot transaction, if you think about it. But you're right. If I could consolidate them, if I could call up Meetup or now WeWork and say, hey, let me consolidate these meetups, they'll say, no, you're paying us money, so I can't. It's out of my control. These are, yeah.
Okay, so a plug for one of your buddies, by the way. So there was a gentleman who came here, John Thompson, the guy who
Yeah,
sat over
yeah.
there with the, talking about day trading or whatever. So he has a tree company,
Yep,
by the way.
yep.
And I messaged him and he came over to my house and they did tree work and it was amazing. Way less than the competition, saved like $300, and they did an incredible job.
Did he?
I mean, so come
Okay.
to this meeting,
Okay.
save me $300.
Oh, you guys need, that's pretty
Yeah,
good.
they did great work.
Maybe that $300 should have came into my pocket. If you think about it.
That pays for the
I was the
donuts.
connector, right?
That pays for the donuts.
You're welcome to bring some chairs out there in for the people, for you two in the back.
There's one here, seat.
Yeah, there's one right here if you guys want to sit, but I do apologize. I never anticipated this meetup to grow this big, so thanks for making it happen. You know, huh?
You have 3 seats available there. So see
Yeah, I mean, if you want to sit next to me, Joe, you want to sit next to me? No, you're welcome to take it if you like. Yeah, okay. All right, so guys, we're going to get started now. I know there's a few new people, so I'll do a very quick introduction. I'm Kay. I go by the EnterpriseGuy. Again, with that logo, that brand, right? It's to remove the friction among the startup community. But also, I typically, when the market environment's well, I typically like to analyze and invest in enterprise software companies, just because they're simply a beast. Like they go up very quickly compared to any other asset class out there. It's probably the behind biotechnology. It's the second or first other industry that's like the best performing in the stock market. So because I track performance in the stock market, it led me all the way to enterprise software. As well as I track private equity funds like Vista Equity Partners. If you guys don't know, the guy who runs that is actually my idol. His name is Robert F. Smith. He's the guy who made $3 billion in 2 years. That's $1.5 billion a year in his pocket. Think about that. That's a lot of money. Like no one. It's not like $3 billion over like 10 years. It's $3 billion over 2 years. So that's impressive, right? Because the simple, the secret sauce, I wouldn't even say secret sauce, but it's just really being in a high multiplier market, right? When things are expensive, most people are like, I can't afford that stock. But if you create that stock or that another similar stock, you get to deploy at a high valuation. Think about that, right? If commercial real estate is really expensive, go build it. Go sell it, right? Because it's high valuation. You don't want to build it when the valuations are low. I'd rather buy it when the valuations are low. So as an investor, you always got to think about, what's the market conditions, what's the environment, what's the price of this asset, does it make sense? And a lot of these companies, something like maybe like a CrowdStrike doesn't make sense because it's really overvalued. So we gotta be in line with the markets and what they're willing to pay, and avoid the stocks when valuations just don't make sense. But double down when valuations are just too good to be true. So let's get started. So yeah, I'm Kay. I've been running this investment club for about 3 years now, really to sharpen my skill set. I did it out of the anger of leaving the financial industry because they wouldn't let me trade. And this originally started as an investment club and only an investment club, and I never thought of anything it would become, right? But little did I know that if you build up enough group, all these sponsors start coming at you and saying, hey, Kay, do this for me, do that for me. Sure. So moving forward, I want to keep it as the coolest investment club in Silicon Valley that pays attention to the changing times of today, right? We want to pay attention to millennials and how they're adopting technology, Generation Y, X, Y, Z, and all that. I want to keep it on the edge. So we'll talk about the latest and greatest in here, which you probably won't find in any textbook. A lot of the changing economics, if you think about it, we were talking last week how if you look at the legal system today, the legal system is just too outdated to catch up to modern day conflicts, social conflicts, right? How do we go about regulating Uber. This is like a, these are not our employees, these are on-demand workers, right? So the whole regulation of the gig economy. So that's the interesting part now. I think more than ever, technology is advancing at the quickest pace, and it's just disrupting everything that we all knew before. Everything from the way we behave socially, our social infrastructure, to our legal system, to workplace HR, right? I think a lot of employees today are working 100 times harder, but they're not compensated that way. It's really the executive or the equity owners who are benefiting like just so much more, right? I remember I said this last week, but historically the range between executive to employee wage inequality was about 10 to 15x. Today it's 300x. So if that is just, that value inequality is so far away today, then I think the people who are not getting fairly treated or that fair amount of value should unite more than ever today, if that kind of makes sense, right? Because you're working for a company where the executives get 300x payout. I get it. The issue is the changing economics at the top, which create distorted asset prices. So that's why we see.
Union workers are going against GM strike tomorrow.
Is it? Yeah, so this is the typical conditions that we see when emotions get tight, right? When things are operating at a very tight level. Example that you see, let's say within your family is, let's say you're husband and wife, and you guys have a lot of like debt, and you're just trying to make stuff happen. You're trying to consume more of life, meaning buy another car or lease another car, and then buy investment property. You're just, you're operating too tight. So that's the reality of the situation today.
Can I respectfully disagree?
Sure.
So Mark Hurd has a medical illness, leaves Oracle, and the stock goes down 5%. So that company lost over $1 billion of value because of one person potentially having a direct impact.
Right. Yeah.
So if
Remember, Larry has 1 billion shares of Oracle.
Right. If an NFL football player can make $50 million a year,
Yeah.
how come the referees only make $50,000 a year?
Mhm.
It's because it's the talent that you're paying for.
It is the
there's
talent.
a market. It's not saying the janitor should make a decent wage, but that CEO of that company's entitled to it because they've got the 1/1000th of 1% of the experience of the world
Yeah.
behind them.
Yeah.
So they've earned it.
Yeah. Real quick, you guys plan to stand for 2 hours? I feel bad, it's like at the corner of my eye, there's a guy standing. There's a seat here.
I'll take it.
Okay, all right. Well, don't force yourself to stand for 2 hours.
The Rolling Stones pull in $1 billion of ticket sales, but the guy who plays music down
Yeah,
the street pays nothing.
yeah.
So I mean, why can't talent be what the market bears for it?
Yeah. The more I look at valuations today and the philosophy of money and stuff, this whole valuation stuff and rich people stuff, it's really a game of, it's a social game, right? I was just telling, and now there's more people in here, so I'm going to repeat what I said earlier, guys. But, I was thinking deeply this week, and I texted Raj Sharma, right? And I'm like, dude, I was just thinking, and this is kind of interesting or funny, money is actually artificial to us, right? Money is not nature to us. Money is a socially engineered product by us, right? But what is truly nature to us is actually trading. Because we've been bartering since the beginning of man's history, right? So, I going back to the valuation, like the way I see valuations work, like why is Uber or Lyft like overvalued like crazy? It's because no one understands valuation and they're just betting like crazy. But this is all due to distorted economics at the top. When I say distorted economics at the top, we printed so much money. I'm just going to give you a lot of money, and you're going to decide irrationally where to put it. So you're going to make malinvestments. Right? But your malinvestments is the opportunity for the short seller, right? The one who knows to capitalize on the other side. So we're in that environment today where the economics are extremely distorted at the sovereign level and trickled all the way down to the corporate, to the consumer level. And it just makes everything tight, right? Everyone's looking for upside when the reality, I feel like most of the upside is in the downside. If you caught what I was trying to say, it's the short selling. But not everyone's a short seller, so not everyone could capitalize on that. So it's going to be hard, right? But you just got to roll with it. Nothing's easy if you want to make more money, I feel, right? If you want to be on the worker side, you want to make more money, you got to climb the ladder. If you're on the business side, you want to make more money, you got to service more clients, right? How much can you physically service? And if you want to make more in investing, well, then you got to be comfortable with portfolio fluctuations, right? Like, oh, I'm down 5% today. Like, how do you feel? Can you contain your emotions and carry on? I think that's a very important characteristic of being a disciplined and well-experienced investor. You got to be be able to manage the emotions. Yeah. Okay. Well, I hope that kind of. Yeah. So technical discussion number 132, guys. This is lecture 132. We're going to talk about the stock market. We're going to talk about millennials. We're going to talk about the Clouflare IPO. It's totally overvalued, and to me, it looks more like a short sale, and I'll explain why. And then we're going to do a Disney analysis. In between as well. So Disney's starting to look like a growth security. It is a blue chip that's slightly overvalued, but everything's overvalued in this market. But they have the right acquisition mix, I feel, as well as global market opportunity in like India and Asia, that they have some sustainable upside that they just kind of tapped into, right? So I do see a floor in Disney in a way, and it seems like a security that could really maybe double, right? It's the same pattern that I saw Amazon at $300. Isn't that insane? Like I'll share with you the chart, and I'll share with you my analysis on Amazon from before. I saw this before, and I feel intuitively through experience that it's going to happen again. In between, we're also going to talk about India, right? I did a little bit of while I was reading the Disney Analysis Investor Day report, it talked a lot about India, its GDP, and the phenomenal demographics of India. Here's something. Okay. So we'll talk about that. So before I start, I like to talk about or have a quote / motivation, get you guys excited. It's easy to stand with the crowd. It takes courage to stand alone, right? And as I'm listening to Felix Zuloff and Grant Williams, who are money managers, say again?
One guy standing there.
Well, what can I say? It's like you knew. It's just like you. Hey, that's a lot of courage in you, okay? So as I was listening to a billionaire hedge fund money manager, right? Felix Zuloff, if you guys don't know, he's one of my favorite money managers of all time. When I listen to his interview, I just love whatever this guy has to say, and he taught me techniques that I never even thought about, right? He taught about a technique where, let's say you own a large commercial real estate portfolio. Well, you could neutralize your position by going into the stock market and shorting a commercial real estate stock, right? You don't want to sell physically and realize the physical commercial real estate capital gains, so you go into the stock market and you short to get neutral. So this is the guy that's like, okay, I know that he's not just one directional, right? Investors who only know how to bet up. This is a gentleman who knows and is disciplined to bet in both directions. So deeply impressed by this guy, and the reason why I brought him up is that this quote right here. He talks about in trading, investing, or whatever leadership position you take, it's gonna get lonely, right? You're always, as you're looking at the charts, analyzing the price and the fundamentals, it's gonna get extremely lonely. But that's something I guess you gotta get used to, because when you find an opportunity, for me, I found an opportunity in uranium stocks. But no one wants to play uranium. Everyone wants to short it down, or people are just too scared to take a position. You're going to be lonely initially, right? Because the economics make sense at the top level, all right? And now I'm just kind of refining my process of like, when do I want to take a position? So today we'll look at some of the uranium stocks that we were talking about in the past as well. And then for Lala in the back, we're also going to talk about ENPH. There's a new competitor moving into that market, so that security actually looks pretty bearish. It was a report released by Citron Research, so we'll look at that. I wanted to share this real quick because I think this might answer Bernard's question earlier. Valuations and stuff, right? So I was on LinkedIn and I saw this post, and it gave me a kick out of my day. It put a smile on my face, and I wanted to share it with you guys. This is actually how stock market actually works, in my opinion, and how human behavior really is. So this has nothing to do with stocks, but it's a guy who's doing a TED Talk, and he's talking about how, okay, look at this guy. He's just dancing at a music festival, and he's all alone, looking all wacky, right? But he just keeps doing it, and then when people start catching on, and he starts supporting those people, and next thing you know, it's a huge group of people dancing. So let's take a look and listen to the observation, because it very ties to when we look at securities as well, right? And for those of you who have been trading gold, this is a perfect example of what happened to gold if you think about it.
So ladies and gentlemen, at TED we talk a lot about leadership and how to make a movement. So let's watch a movement happen start to finish in under 3 minutes and dissect some lessons from it. First, of course you know, a leader needs the guts to stand out and be ridiculed. But what he's doing is so easy to follow. So here's his first follower with a crucial role. He's going to show everyone else how to follow. Now notice that the leader embraces him as an equal. So now it's not about the leader anymore, it's about them, plural. Now there he is calling to his friends. Now if you notice that the first follower is actually an underestimated form of leadership in itself. It takes guts to stand out like that. The first follower is what transforms a lone nut into a leader. And here comes a second follower. Now it's not a lone nut, it's not two nuts. 3 is a crowd, and a crowd is news. So a movement must be public. It's important to show not just the leader, but the followers, because you find that new followers emulate the followers, not the leader. Now here come 2 more people, and immediately after, 3 more people. Now we've got momentum. This is the tipping point. Now we've got a movement. So, notice that as more people join in, it's less risky. So those that were sitting on the fence before now have no reason not to. They won't stand out, they won't be ridiculed, but they will be part of the in crowd if they hurry. So, over the next minute, you'll see all of the those that prefer to stick with the crowd, because eventually they would be ridiculed for not joining in. And that's how you make a movement. But let's recap some lessons from this. So first, if you are the type, like the shirtless dancing guy, that is standing alone, remember the importance of nurturing your first few followers as equals. So it's clearly about the movement, not you. Okay, but we might have missed the real lesson here. The biggest lesson, if you noticed, did you catch it? Is that leadership is over-glorified. That yes, it was the shirtless guy was first, and he'll get all the credit, but it was really the first follower that transformed the lone nut into a leader. So as we're told that we should all be leaders, that would be really ineffective. If you really care about starting a movement, have the courage to follow and show others how to follow. And when you find a lone nut doing something great, have the guts to be the first one to stand up and join in. And what a perfect place to do that at TED. Thanks.
I don't go to raves or anything, but that definitely, I see that pattern in just human nature, because when we're trading, right, we see a stock just go straight up like gold, go parabolic, or like silver. You gotta understand this, that just, if you watch that video again, just think about how the people reacted. That's exactly what I see in stocks all the time. So if we take a look at silver, right? Silver was trading, let's say, we were talking about silver. We were the lone nut in November, okay? And, we were just talking about it, and this thing just kind of went down, right? And then around, let's say, July, it spiked up right here, right? And then everyone just kind of rushed in and just went really parabolic. And then now it's sold off. So this is kind of like the FOMO move right here. So when you trade stocks and you see something very overextended like this, it always helps to take gains. And for those of you who are in the chat room with me, you guys hear I'm saying I'm taking gains right here. But I don't always take it perfectly, because when I took the gains off my silver, I actually took it somewhere I actually took it right here, right on that day, probably. And I was just like hurt the next day, like, oh wow, it just keeps going up. Maybe this is like a lot more influence than I think. But, I knew that it needs to correct, because nothing kind of goes up all the way. Yes, regression to the mean, reversion to the mean, as some CFAs would call it. But you do get into some situations where you get reversion to an expansion, right? Reverting back to expansion, where it just kind of keeps going up. So I hope that video kind of helped you understand human nature. It's actually very interesting. And when we talk about, deploying like a global currency like Libra or Bitcoin, it's the same dynamic as that. How can you convince the crowd to use this cryptocurrency, this digital currency, this monetary currency, whatever, right? But also when you start a startup, how do you convince those first few CIOs to use your software? Because once you get enough CIOs to use it, then the momentum kicks in and you become a sales force, right? So it's actually the reality of a business owner that I've seen. The real money actually comes in the later years when you put in all that energy and just hammer away for years and years and years, and then one day it just goes parabolic because it's a social thing. So yeah, I guess what I'm trying to say is understand what is nature to us and what is artificial to us. Money is artificial to us humans, but trading is our nature, right? And if it's our nature, I think it helps to kind of understand how that nature works, the dynamics of it. So that's a little video. Damn, this quote's kind of funny because you're still standing. must be hard up there. No, I'm kidding. Yeah, so let's get started, guys. So I'm going to do a quick market update. It won't be a deep one because we're going to talk about Millennials, we're going to talk about Disney stock, we're going to talk about Clouflare and some technology stocks today. But I always want to give you guys a pulse on the market and how I feel every week as it changes. Typically, a pulse like this should be more accurately done every month, but I do it anyways. So what is the worldly wisdom that I could share with you today? Global economics are always changing. And so how you position yourself for these changes is what Kay enjoys talking about the most, which is investing, right? Remember how I tell you, if you decide to do nothing with your life, if you just stand right there, well, you're on a train and you just don't know it. But this train has really evolved over the years. With technology today, this train is more of a bullet train or a hyperloop. So that's something to be aware of, right? We always have to be, like for example, if you decide not to go be productive or work, well, the people around you will go be productive and work and then pump up home prices and then you can't afford home prices, right? So it's always, unless we all agree not to work hard, but that's not the case. And this situation gets even worse as the economics at the top gets very distorted. So that's just something to understand. I put in this picture right here that I pulled online. The economy is always changing. Economics are always changing, and so you could capitalize on it if you know how, because that's what investors do, right? Investors think very critically, or even traders, for traders, they would think critically about a certain trade setup, a trade situation. The investor would think about the current, overview of this marketplace and how that setup looks, and then they'll position themselves either on the long or short side to figure out how to capitalize. So the economy is always changing. The economy is constantly evolving. What we produce, how we produce it, the technology, our relationships to other people. It's very important to study economic history because it provides perspective to today's capitalism, proves that the status quo isn't permanent. Economics is also in constant flux, changing alongside the economy. So that's what I'm saying. Like the reason why we were talking in the beginning in this investment club is that I want to really keep this investment club on the bleeding edge, the leading bleeding edge. Heard it from SK this week. That was a pretty cool statement. I want to keep it on the edge because a lot of this stuff is like, look, I'll tell you, if you go online today, right, and you go look on YouTube how to make money, and they'll say you could make money in drop shipping. People don't realize how much of like lag that is. When they teach you how to make money on YouTube, it's too late. The opportunity is gone. Because the next opportunity in that is actually to teach something that doesn't work anymore. So the real opportunities are always opportunities that no one else see, and you're always going to be lonely tackling it first, right? You're going to be that lone nut dancing all weird in front of the crowd before it becomes a big thing. So the next thing that guy would probably do, if I was that guy, now that the crowd's there, I'd be exiting, before I get back into position. So that's the reality of being a business owner, being an investor, or trader. You're always looking for opportunity that no one else is seeing, and it's always going to be lonely. So I'm not saying go at it lonely, right? But maybe establish a group of people who are high-powered thinkers and work together to kind of see if this investment opportunity or thesis really makes sense. So be aware, again, economics are always changing, and the best opportunities are typically the lonely opportunities. Could I zoom in? Sure. Sorry about that.
Thanks.
Is that better for everyone?
Yeah.
Okay. Remember, if you don't take action, the economics below you is always moving. The world will move without you, ... Now, with the blend of advancing technology, I would also like to add that the world you stand on is moving faster and faster with each day. In the 90s, you'd be standing on the economic train. Today, you're standing on an economic bullet train, and it's only evolving to go faster, right? And to really, this is the comparison that I put in right there, right? You got the traditional train and the bullet train, though today is probably the hyperloop. So what are my thoughts on the markets? Markets are 1% away from all-time highs. Isn't that amazing? Oh, you had a comment? Oh, sorry. You got the mouse right there. No, don't worry about it. You're good. This is like a new feature that they put on here. There's like a scan every time. Okay, we're good. So markets are at 1% from all-time highs. What does that tell me? So back in November, December, things were looking very gloomy, and now markets are kind of ramping back up to all-time highs. I'm convinced now that probably the governments don't want a recession to happen at all, because this really hurts the tax revenue, right? And at this time with unprecedented debt levels, they need tax revenue more than ever. So I also had a conversation with Raj this week saying like, do you ever think like Trump causing volatility in the markets is a form of like financing from the government? Because if you create volatility in the stock market, what do people do? They sell their position, realizing a capital gains tax, right? So in a way, if you create volatility, people are going to be trading and the governments make money. So I was just thinking about that. Is that like a way to make it? Well, it makes sense because if I position myself as a sovereign guy and I position myself in the government's position, if we were in a 10-year bull market and I'm like, it's been 10 years and no one's really selling, they think this is going to keep going up. So maybe I could engineer some success by financing through scaring people and creating volatility. Who knows, right? That's just something I was thinking about this week. So yes, it does appear to me that governments are doing whatever it takes to hold up markets. So this might be a situation where what I was explaining last week. My view is that value stocks are the way to go. You might want to allocate away from growth stocks. Stocks like MongoDB or Salesforce, they're looking pretty heavy. They're not really cruising, so I wouldn't really play them. But I am looking at relative value stocks. There's a difference between value stocks and relative value stocks, right? So value stocks are stocks that are intrinsically valuable, so below book value. But relative value would be something like a Carbon Black. Carbon Black was overvalued, but relatively undervalued compared to its peers. But Carbon Black is now acquired away by VMware for a very cheap price, in my opinion. Like I'm just like, wow, but hey, it happens. It sounds like from the markets, more QE is coming, right? With the ECB and all. So if more QE is coming, that's good for gold, right? We're going to print more money, devalue the currency, because we're going to do whatever it takes to hold up the markets. And in a way, if you think about it philosophically, because the government represents the people, right? And if they decide to print more money, devalue the currency, how do they represent the people when they're devaluing the money that people work for? So I'm not the sovereign guy to talk about that. I'm just the one level below that. I focus on the enterprise. But these are important things to analyze at the global macro level to understand the big picture stuff and how it moves the reality, or our economic reality, right? I'm always looking for ways to participate in the next upside. And again, those are always opportunities that are lonely and you won't find YouTube videos on it, right? And I think an easy way to kind of identify that is it's what I always pitch at the mixers. So if you guys go to my mixer, I always ask everyone to pull out their phones, get on LinkedIn, and then use the nearby feature and connect on LinkedIn. And I know we have a gentleman in the back who works at LinkedIn. Again, the way I kind of participate in looking for upside, so I'm going to bring up that investment thesis, right, for some new people in here. So this is Facebook right here, right? And this security is trading at $500 billion in market value. Right? As these securities increase in value locally, especially Facebook with the headquarters in East Palo Alto, it causes home prices to go up significantly. So LinkedIn is also a product of a local product. Oh, didn't want to go that one. So LinkedIn was acquired by Microsoft, acquisition, for $26 billion. And this is really my favorite chart. Oh, I put in, that I always bring up. So CBN, and this is how I think about opportunities, right? You gotta think about upside here. Is there upside? So this is a chart right here. So LinkedIn was acquired by Microsoft for $26 billion, right? And if you look in the public markets today in real time, I didn't do it last time, or we go to screener, you're gonna see the biggest companies in the world right here. So number one is Microsoft. So you would assume that if it's number one in the world, it's a very highly intelligent entity, right? Or at least it's really exposed to a high velocity of business. So Microsoft, the biggest company in the world, acquired LinkedIn for $26 billion. And we just saw that Facebook's worth $500 billion. Well, I think they are betting on that $26 billion becoming at least $100 billion, at least 4x. So if it's $100 billion and we have LinkedIn employees here, LinkedIn's headquarters here, right? Okay, because you go there every day, right? So if the employees are here, then if Microsoft continues to appreciate, because Microsoft's looking for upside, for growth, right? it's going to make this economy a lot harder if LinkedIn appreciates to 200 billion, right? Which is half the size of Facebook. So to me, that kind of will sustain prices, and maybe I would be observing home prices around LinkedIn headquarters, right? Because it's just like your employees are going to benefit from this substantial upside, perceived upside, because we have a real life market comparable called Facebook trading at 500 billion in market cap. A little fun example right here. This is my portal to all the stocks in the stock market, right? And I like to always joke, well, not really joke, but just tell people, like, is it funny, like, you know, these are the 10 biggest companies in the world. They really influence our day-to-day lives, right? Does everyone, so what I always say is Microsoft's number one. Does everyone use some form of Windows operating system on Windows, Office, Excel, and all that? Do you present on PowerPoints, right? Do you use an iPhone, or do you use some sort of mobile device? Or do you shop on Amazon? Do you use a Google search engine, right? So the beauty of analyzing stocks to me is just not the numbers and the money, but it's actually a vote of what humans want to do next. So seeing these top 10 companies in the world or whatever, it just shows me like, okay, everyone has most likely a JP Morgan bank account and has a Visa credit card. So very fascinating. But you know, that's everything in between, right? Because there's different segments to the markets out there. If I could draw for you guys what the segments look like, it'd be, you know, it'd probably make more sense if I do a bell curve. So the segments look like this. We did analysis before, but what it will look like is anything right here is 50 billion up, right? The vast majority is anywhere from 1 to, I'd say, probably 20 billion. That's the vast majority of stocks.
So, I'll wait till you're done your own, Brian.
Huh?
Wait till you're done.
Oh, I'm good. Yeah.
If you go back to your table, the other thing those things have in common is that those are all incredibly profitable companies.
Yeah.
So like what I've been saying, like a parrot every day is, if you invest in companies that are strong, getting stronger, with reasonable valuations, so look at the P ratios
Yeah.
of those. If you picked 15 of those that have a P ratio between 10 and 30,
Yeah.
even if the market goes down 10%, the market downturn tends to wipe out overvalued stocks, and the stable ones like the Walmarts.
Exactly.
People still go to McDonald's even if the economy's lousy.
So that's why I'm saying we got to shift over the value, because
Right.
value will remain, but the elusive securities that exist today, something like a Clouflare just IPO'd, right? Nothing on its balance sheet.
Absolutely.
It's negative. There's negative balance sheet value. So why are investors valuing this company at 5 billion?
Right.
It's worth 5 billion and there's nothing on the balance sheet.
So you put 5% of your portfolio in the wild, wild west of the Clouderas, whatever, and you put 50% of yours into the AT&Ts and the Walmarts, and you get 25% returns on companies that are going to be around, like Target and Walmart and McDonald's and AT&T and whatever. And if you just look at your whole portfolio, you can still play with Cloudera, and I even bought FireEye and all these other ones that, you know, even if you're wrong on those, you might lose 5% or 10% on those, but you get 20% on the other ones.
Sure, that's like a that's like a public venture capital portfolio.
Absolutely.
You would love venture capital in that sense, right?
Absolutely.
Venture capital is basically a commercialized version of options trading.
Yeah.
So if you trade options with Leaps today, well, if you want to do it in a commercialized manner, you do it with you organize as a venture capital group. Speaking of Cloudflare, right, worth $5 billion and nothing in balance sheet value. It's like me saying, hey, Bernard, I'm worth $5 million, but you see all my bank accounts and they're negative.
No, the point I'm trying to make is for the people in this room, I'm hoping that people are learning from you. I certainly am, because if you can allocate...
I'm learning from you too.
Well, I appreciate that, but for people here, if you put, like, you know, Bitcoin could go up, could go down. If you put 100% of all your wealth in it, you're not managing your life right.
Yeah.
You might as well go to Vegas and go to the roulette wheel, and you might become a millionaire, or you might lose it all.
Yeah.
But if you put 50% into stable companies, strong companies, you'll still outperform the market. Like you're saying, don't put the money under the mattress, because if you do that, everyone else is gaining and you're sitting still and your wealth is going down.
Exactly.
So look at the companies that you've done, which I've really appreciated. You've taken companies that are what I call strong getting stronger, that have potentially undervaluation.
Yeah.
So take about 20% of your portfolio, put into that. put 50% into the ones like the McDonald's and the ones that are just doing unbelievably well.
Yeah.
Look at Costco, freaking incredible. Opens up their second store in China, and their lineups at that one.
Yeah.
I mean, just think about it. A country like China
Yeah.
has 2 Costcos. We have how many in the Bay Area?
Yeah.
I mean, you know what I'm saying?
Yeah,
Just
yeah,
think about that for a
Yeah.
moment.
No,
The
I agree.
potential, pick 20 stocks like that, and for people in this room who are a lot younger than I am,
Yeah.
if you keep doing that, you'll be able to retire at 50.
Yeah.
I mean,
So
that's the...
speaking of deep value, right? The markets keep appreciating the way it is today, and I'm shifting over the USA value stocks and away from USA growth stocks. I'm even more bullish on international emerging markets. So China, India, I'm getting significantly bullish. My only concern with that trade is just a dollar rally. If the dollar goes up, it hurts these economy, right? So I'm looking for a situation where they're going to devalue like crazy, and it's going to act as a strong tailwind for these emerging markets. And the beauty of these emerging markets as well is Russia and China are classified as emerging markets, right? But they're buying a significant gold position. So I'm bullish on gold, right? I'm bullish on gold, and I'm buying Russia, who is buying gold like crazy. And isn't that like a derivative gold position? It is.
Yeah.
So these guys are actually creating a very powerful position for themselves. I'm getting very bullish on China and Russia, but it's just a matter of timing right now, right? Because it's just it seems like we're at a global inflection point where central banks are seriously talking about money printing and how we're going to devalue currencies and all that, and it's putting it all into question because how much more can the people handle this wealth inequality, right? How much more can people in Silicon Valley, 2 families working together to buy 1 home, right? Are they going to stretch to 3, 4, 5 families? So if that wealth inequality keeps stretching, then we're going to start questioning the currency we use. And this is why the global economics sets up perfectly as to why an alternative digital currency makes sense, right? I think that really makes sense. A blockchain currency makes sense, but betting on Bitcoin and Litecoin and all that, there's significant risk to it because we just don't know, right? We just didn't know that guy dancing alone was going to have like the crowd of a lifetime all around him. So the way I perceive that is that if you're on the younger side, I think it makes sense to consider a position in something like a Bitcoin because it is you are like one turn away from global monetary policy or monetary currency, right? Where the mathematics of Bitcoin just makes sense, and you're in a situation where the global demographics and sovereign debt is just in a crap show, right? It just looks really bad, and the question to ask is like, well, the real question to ask now is like, do I hold a currency, a USA currency that depreciates every year, or do I hold a fixed currency or asset like gold and Bitcoin that doesn't depreciate?
The dollar is rallying for last whatever years compared to euro and everything else. So,
Yeah.
So I mean, it is still a
It's-
better
yeah.
pair as compared to euro.
So if I skip ahead right here and talk about this is the dollar rally. It has been rallying. The way I see it is, so this is your first time?
Second time.
Second time? Okay. Are you familiar with FX, Forex, quite a bit?
Yeah.
Are you pretty active in the FX world?
Well, I watch it more
Okay.
to understand my own
Okay.
trade.
And do you also have a technology background by any
Yes.
chance? Okay. So software background?
So, definitely.
Okay, so then you probably understand this very intuitively. The way I perceive the dollar is it's very much like software, right? You know how in software, especially in just enterprise software or whichever software, there's a technology stack. And there's a stack of software, right? Everything from the infrastructure as a service to platform as a service and then application as a service. And whoever kind of sits on that platform has to pay the platform below them. So if I'm Salesforce, then I always have to pay my infrastructure, which is Amazon, right? So the way I perceive the dollar is very similar to that technology stack or the software stack. The dollar is the platform for the rest of the world to sit on. And so how they manipulate the dollar up and down is sort of a way how they weaponize the dollar, the mechanics of it. So every other economy doesn't like that, right? So we're moving into the later stage of the global business cycle, and we're seeing that the dollar is being manipulated like crazy and everyone's tight. The major economies like Russia and China don't really like that, and they're also building up significant military power, technology power, right? Because as a sovereign, you don't think about currencies anymore. As a sovereign, you actually think about what's my average rate of intelligence for my human capital? What's my average rate of technology? Or what's my ability to blow a satellite out of the sky, right? So you think about your military and all that because you print currency. And so when I think about all that, they don't want to operate on top of the dollar anymore. It's getting that way because, well, look at this tweet by Trump. He says, the Federal Reserve should get our interest rates down to 0 or less, and we should then start to refinance or restructure our debt. Interest costs could be brought way down. While at the same time substantially lengthening the term, we have the great currency power. Okay, this is him bragging. We have the great currency power, and balance sheet. The USA should always be paying the lowest rate. No inflation. It is only the, I can't even say that, Navi of Jay Powell and Federal Reserve that doesn't allow us to do what other countries are already doing. A once-in-a-lifetime opportunity that we are missing because of boneheads. So he expresses a lot of emotions on a very, if I was a president or if I was in a leadership role like that, and I had the ability to influence the weapon of the world, let's say, which is the dollar, I wouldn't be tweeting like that because you're actually going to hurt people in terms of life and death, right? Where you cause a trade war, I'm hearing that China has a monopoly on like pharmaceuticals. I think you work in pharmaceuticals, and I hear that 90% of the generic drugs out there are actually originated from China. So this is a situation where if they keep on escalating this trade war, well, you're going to see people, from a macro level, there's going to be people dying who can't afford a drug that they need a drug. So it's just like, I'd probably be more private about it, right? And kind of listen to the crowd, what they want. But if you read every economics book, they always talk about war being the least productive thing you could do. So I always apply that to my relationships and family and all that. If we're arguing, we're not going anywhere. So let's not argue. Let's always be happy and be productive, right? Because when everyone goes to war, you actually destroy productivity, meaning you destroy a building that you built up that in the future could cure cancer or whatever, right? So war actually stunts productivity, but there are many factors to that, right? If you watch the Avengers and listen to the villain in the Avengers, I'm talking about Marvel Avengers. His theory behind, if you listen to him in the beginning, if I recall, his theory was that this universe is getting overpopulated. There's not enough resources, kind of like the planet, right? Where we're at 7 billion, 8 billion people in population. It's going to get to a point where we're going to fight for resources. So commodities, especially if we manipulate the currency, it's going to make the demand for commodities even more. I get it. It's a tough call. But it'd be selfish to say, I'm just going to live this lifetime and then go away and let it be the world's problem, right? But then if you have kids, you kind of care about your kids. So yeah, I mean, all this stuff matters. I'm just not the sovereign guy, right? I'm just the investor paying attention to what sovereigns do, and that's my take on the dollar and how they're kind of leveraging that to their advantage. And I think the rest of the world wants to allocate that power away from them. So you're seeing all these, China getting a discount to buy oil and stuff like that happening. I should really stick to stocks. I don't know if that kind of answered anything, but that's.
And people are trying to get away from dollar being the trading currency for
Yeah.
the whole world. Yeah. So
Yeah.
it will show up.
So
They're trying for the last 10 years, ever since the financial crisis.
yeah. So they've been trying for a while, but I think
Eventually they'll succeed.
I think the efforts increase with emerging technology as well as tightening economics, right? If things get tighter and tighter, it just makes that checkoff list more and more important. So we'll see how it plays out. I personally think that it's going to end up with a dollar devaluation. This is my take, right? So if they're going to devalue the dollar, then that's going to be extremely bullish for stocks, for real estate, for gold. Bonds is questionable. Emerging markets, extremely. So that's where I see us investors could capitalize on next. That's where the great upsides are. So in the next recessionary cycle, I'm going to be extremely bullish on commodities and emerging markets. And then I'm going to get back to my favorite, which is enterprise software. So that's my quick investment thesis or framework. It'll change as I go. But for now, I'm seeing that this market doesn't want to go down. And it seems like from his tweets, the sovereign's tweets or comments, they're going to do whatever it takes to hold it up. So that's the reality of it. I can't question it. I just got to play, right? It's just like you're dealt with these cards. You just got to play with the situation, right? Now, the other thing I want to say is his tweet saying if we go to 0 interest rates, remember, Trump has a commercial real estate portfolio. This would appreciate in value with the 0 interest rates, right? So meaning if you get lower rates, the asset price goes up because of cheaper money. You're giving the ability for people to borrow even more money, and I don't know how it's going to play out, but it is unprecedented times. You typically, I mean, if you do observe history, typically, I think the Roman Empire and all that, whenever they devalue the currency, it always ends with the empire resetting or going away or, extinct, right? Well, I just don't know in this day and age with the technological advancements and stuff like that. It just seems that conflict will always arise in every game, right? If you think about this at a raw level, like what's going on, what we're doing with the stock market, the economy, and all that, and jobs, it's simply a game. It's a game that we artificially engineered, right? Money is a socially engineered product, and we want more money. But what is truly nature is actually, the truest of all currency is actually reputation currency, in my opinion, because that's something that's just, someone is known for among a crowd, and that's something I didn't know until I actually took a position, as like a speaker in a crowd. So I always advise everyone, like, hey, go speak in front of people, because there's just a world of knowledge to learn that you just don't know. It's vastly fascinating, in my opinion. We already talked about this. Volatility equals good for governments because capital gains tax equals to government revenue. Something I'd think about if I was a sovereign. But anyways, let's jump into the USA indices, and I'll be pretty brief and quick here because I want to talk about stocks more so and opportunities. So this is the S&P 500. We kind of review it like maybe every week, every other week. But this is what I'm seeing. So there's been a sharp rally held above the 50-day moving average, which is the orange line. So things are looking positive. September is typically a volatile month. So I am anticipating more volatility. But if it doesn't happen, then it doesn't happen. So I'm just going to play as it is. That's why I'm starting to look at these lower beat-down names like Cloudera, BlackBerry, Mobile Iron, FireEye, and so forth. Because they're just so beat down. They're relative value software stocks. And I'm primarily a software investor. NASDAQ. So this looks pretty much the same thing. It is setting up sort of a pattern right here. This pattern, as you can see I drew in blue, is called the rising wedge. Typically this is a pattern where it gets pretty exhausted and then it'll break out to the downside, but patterns don't normally work on indices, so I don't even know why I'm drawing that. But I do want to take note that it is above the 50-day moving average, above the 190 price area, and so I want to see where this goes. And again, for those of you who are new in here, the reason why I look at these indices is because they serve as the heart of the economy. Why do I believe that? Because of easy economics at the top level, distorted prices of assets have created a point where everyone's forced to play the stock market or forced to invest into assets. And so the government, or Trump knows very well that this game has been, cornered into the stock market. So the stock market today is acting as a very solid indicator, in my opinion, of just the global economy. It's literally the heart right now. If you think about just the economics of the situation, right? In every game that we get into, if you guys played Monopoly before, ideally we all start off fair, right? When the game starts, right? And then it ends with what? Lack of fairness, right? So in this case, I joke and say, in real life, the game doesn't reset. Meaning you don't put the board game away, you keep playing. Losers are gonna stay the losers, winners are gonna stay the winners.
Recessions resets in some way.
Yeah, so in a way, at one point I thought about it, right? Like if the wealth inequality keeps expanding, then the government has less ability to command their people, the human capital. Why should we work for you when you created such a poor environment for us? But if they crash the market intentionally, then they don't get capital gains. They don't really get spending, which is the revenue. So this recession could be a serious event because they just don't have the money to pay down the debt, the Social Security, and all that. But I just don't know. Right? You're asking me the multi-trillion-dollar question.
Yeah.
So I can't answer that. This is just a investment club that's out of a real estate office next to Apple. I don't know anything, man. I'm just I'm looking at opportunities, but I love this way of thinking, though. Developing an investment framework, developing a model about the world, and just kind of A/B testing it with my money to see if I'm accurate about my perception on the world. That's the art of being an investor, I feel. So looking at NASDAQ, doesn't look too heavy. Looks okay. Nothing much, really. There's nothing much to comment. It's just choppy sideways to the upside. Dow Jones, the other corner heart of the economy. Did I forget I was going to say something just now? So one more thing I wanted to add was like in the game of Monopoly, right? Towards the end of the game, it becomes very asymmetric, meaning you have a very defined winner and a defined loser. Well, think about 2001, 2008, and today. In 2000, so those were like different decades. Every decade has its own features and situations, right? So again, thinking as though that you were the Monopoly game player, the government, and you're deploying money into the system, right? Well, in 2001, in the first game that you played 3 games of Monopoly, in 2001, that game, the economics over time went asymmetric into the .com, right? And then we know what happened after that. So you reset, you play again. The game number 2, this time around, as you deploy the money, you notice it went to real estate, consumer level real estate, and then evolved into derivative real estate contracts, and then it reset, right? So now game number 2 went there. So for those of you who are new in here or whatever, the game number 3 today, which we're in, a lot of people call it the everything passive bubble or whatever. Yeah, because it's just money squeezing into whatever upside there is. But the Achilles heels, they say, is actually the sovereign debt and corporate debt and corporate buybacks. So the buybacks are causing the double leverage on corporations. So if we do have a stock market decline, they're going to feel it pretty hard. And if corporations feel it pretty hard, then they're going to hire less. And hiring less kicks back to consumers' ability to bid up home prices. And you kind of see the trickle-down economics, right? So that's the mechanical theory behind it. But we don't actually know in application will that actually happen. So you just kind of have to wait and see, right? Because this area is, besides like if you don't have confidence in the real estate market, well, this area, you got to think about the quality of human capital here. No other place in the world has this type of human capital. And that's why I'd say I have a pretty unique amount of insights right here. Because, I got a person with a shirt that says Docker, which is an enterprise software company. I don't know if you work there, but I know, SK's at AMD and so forth. And we have enterprise software salespeople in here as well. So it's a world-class human capital that's clustered in Silicon Valley. So those are some factors that you want to think about our local economy here and how powerful it is, because it does create the digital engine of tomorrow, right? If you know the world's moving more towards the gig economy or digitization or digital transformation economy, whatever, well, where's the digital engine? We're not talking about the industrial engine. We're talking about the digital engine. And this might become a situation where it might be a world digital engine, right? So I keep telling people this. I hear a lot of people saying they want to retire, move out of Silicon Valley. Typically, the less sophisticated profiles and the more elderly tell me they want to get out of Silicon Valley. Now, when I go out and network with people in Silicon Valley, I hear people, from Switzerland, my dad's a venture capitalist, from Singapore, a VC fund from Saudi Arabia, they're all coming here. So so that's the dynamic I see. One dynamic is people leaving because of demographic profile, aging, or just too expensive monetary profile. But then at the same time, I'm seeing a sophisticated crowd trying to come in here and find a spot. So should I be shopping international? Hey, if you want to come to Silicon Valley, I'll be your realtor or whatever, right? So that's a way to kind of think about it. It's extremely dynamic.
The thing you covered last week about Fremont properties being valuable because of the buildings that are being built up, it's actually pretty insightful.
Yeah.
If you look,
The newer properties, right?
Right, the whole other side of the bridge.
Yeah.
If you think about it, that graph that you put up, or the table with all of those companies, half of them are in the Bay Area. So
Exactly. So
think about it.
This is a very strong economy. You be all right, because the human capital of the biggest company in the world, second biggest company in the world is right across the street. The human capital's here.
So think about it. As revenues and earnings go up, that means stock performance goes up, which means employees get their stock purchase plans, which means they got an extra bag of $50,000 to spend on houses. So it means all these thousands of employees.
Yep.
If you think of the population of the Bay Area, their expendable amount of money just is going up and up every year, which means more and more people not renting anymore and buying houses. And so that whole Bay Area is just continuing to grow. It's whoever owns multiple houses is doing incredibly well.
1,000%. I'll tell you this, when we look at Crunchbase, right, when we look at the venture capital ecosystem and I look at the companies that are being funded today, most of the unicorns originate from Sand Hill Road, Silicon Valley.
Yeah.
Right? And that makes it harder on everyone else. And it's very telling of something. It's very telling that they're creating the digital infrastructure that is massively in demand for tomorrow. So we're going to look at Disney's analyst report or investor day report. They're going to talk about how people in India are going to consume, they're consuming more and more data at a cheaper price than the rest of the world, right? So I never thought about it that way, that if you consume more data, what is the infrastructure that's needed to let you consume that data? Meaning if you want to spend your Saturday scrolling through Facebook and just like, you know, seeing what your friends are doing, you're consuming time and data, right? That service is actually provided to you from some database software infrastructure, some network infrastructure. And that, it tends to be built here in Silicon Valley. So I keep going back. Like I think a lot of people say like, yeah, you know, real estate prices are too expensive in Silicon Valley. Silicon Valley is going to be somewhere else in the world in the future. I agree, but infrastructure doesn't move that quickly. Meaning the human capital, you know, the culture, the habits of Silicon Valley, it doesn't disappear in one day. It's true.
It could now, because I think California is moving, trying to move
Yeah.
to a law where they're trying to say that every contractor now has to be a permanent employee. And if that
Has to what, I'm sorry?
Every contractor
Yeah.
has to be a permanent employee, otherwise he gets some extra benefits.
Yeah.
And if that happens, all the contractors, I think companies will have to move them away from California, and you will probably see Uber drivers won't be there anymore.
Yeah. Yeah.
Right?
So
So California right now is, I think, at a world job. If that
Yeah.
law passes, then I think Silicon Valley, I think Austin or Dallas could actually become next Silicon Valley.
yeah. So no, I'm 100% in agreement with that. The government has incentive to scatter out Silicon Valley, right? Because it's like revenue sources for them, right? Texas is like, hey, come over here or whatever. But you got to think about it. It's doing a good job for the people who are in the world of venture capital or in the world of a more sophisticated investment model. Why? Because who would it pull out first? The lower and less affordable ones that could afford the.
Bigger ones are already pulling out.
I mean, but I'm saying what about the more sophisticated type of employees who are high earning? They kind of remain, wouldn't you say?
No, but I think if you look at Google, like, they are actually giving their option to their employees to move out to
Yeah.
Texas, right?
Yeah.
Same thing other companies are doing as well.
Yeah. The way I'm thinking about it is I'm tiering out the human capital, right? Let's say the finest is at the top, right? The software managers and all that, and then the software developer at the bottom. I hate to categorize it that way. I apologize, but I would assume that the lower tier paid ones will exit first, leaving the higher tier human capital to remain. So when I go out there and network, my probability of meeting like a head of service now is higher, which I did. I didn't even have to try. They actually came to me. You see what I mean? Like, how do I meet the head of service now in engineering?
No, I think
From-
so you have to be right. So if you're saying if you want
It's
to be
increasing
an
my
investor,
probabilities of meeting people.
being an investor, I think this is the right place.
Yeah,
If
yeah,
you want
yeah.
to be a worker,
Yeah. So
that's where.
yeah, so it depends on the view you view it from, right? But it's just insanely aggressive economy. I love it. I also hate it sometimes, but I always think back when I hate it, I think of there's nowhere else. So I really like it at the end of the day. Looking at the Dow Jones over here, so sharp, well not too sharp, but just a trend line up right there. Looking, again, most of the markets looks like it wants to make all-time highs. IWM also recovering, right? Up and down the pink line right here, which is the 200-day moving average, but now it's back up. So things are looking okay. I mean, nothing too stressful in the market, so I'm pretty comfortable taking long positions on relatively valued software stocks. Looking across the world, it's pretty much the same. This is Nikkei right here. We have to look at the other major economies, right? There's developed markets and then emerging markets. Japan's another developed markets. Again, sort of a hockey stick to the upside. Very parabolic. I think this is going to correct to the downside a little bit. The key thing that I'm watching is that it doesn't correct too much to create more massive volatility, right? But it looks like the direction of the markets are still kind of sideways to slightly down from a bigger picture. Looking at Europe, same thing. Europe stocks 50, same thing. And then the DAX. So like I said, I'm just going to go through it pretty quick here because we want to talk about stocks today. Emerging markets. Again, I'm bullish on emerging markets. So pretty impressed with this move right here. Emerging markets will be the trade in the next, it's going to be the trade in the next 10 years. And to me, for gold, I think gold's going to be the trade in the next 5 to 10 years as well, right? Where I personally think gold will go to like 3,000, just because the high probability economic situations of the sovereigns, where they printed so much money, they're in so much debt, that you just kind of know they're cornered in a situation, and you kind of almost can't predict what they're going to do next. It's going to create massive value for probably real estate, but it's going to definitely for gold, because gold has been beat down for 6 years and only recently indicating a long-term buy signal. So
one thing to note there is, I think for gold beating down for 6 years is not much, because if you look at history, and the gold, most bullish cycles
Right,
It's one
right.
thing because
Yeah.
it's very stable.
Yeah, yeah. So I think the only time now, whichever time periods you analyze, right? I would like to take a look at that time period and see was the world's monetary currency in question at the time, right? Because I think I realize now that because every 100 years, right, there's a different set of human beings on this planet. So I can't get more than 100 years of actual experience and knowledge because that person doesn't exist anymore. But I realize that the world goes into different motions, like Ray Dalio would say, and there would be a world reserve currency every 100 years or whatever. Isn't that amazing? Like, if you didn't think about that and you just knew what you know now, you'd be like, dollar's king, dollar's the platform, everyone's going to use it. But if you think about like 1,000 years of analysis, dude, there was another world reserve currency, but because we're the current 100-year set of people, we don't know about it. So very very fascinating when I think 1,000 years of analysis. Looking at emerging markets, so breaking down to more specific emerging markets, I'm bullish on India, and so let's get into the India part and see why it kind of looks bullish for India, right? So India's GDP, this is probably a standard chart that everyone knows. I pulled this from the recent 2019 Investor Day report by Disney. So this is from Disney itself, right? Since 2007 to 2017, 8% compounded annual growth rate. So that's pretty nice. India's GDP, 8%. 600 million plus in population. Well, there's more than that, but population below 25 years of age out of 1.3 billion total in India. Almost about half of the population is below 25. What were you doing when you were below 25? I can't speak to that anymore, right? But at 25, you were a hyper consumer, meaning you'll consume whatever it is, and whatever your parents say, don't play games, you'd be playing games or whatever, right? So this is half of the population is primed to consume like never before. They're going to consume insurance services, financial services, real estate services, digital data consumption services, whatever. Education, anything. It's just like, this is like, I don't want to say this is a new world, but there's massive opportunity in consumption. So they're going to pay out. And we see that in the pictures like the one you shared with IKEA, right? It's not just a line that you showed me, but a highway, a line of cars on the highway. So massive opportunity, and Disney's trying to capitalize on this. So it's at the same time as Disney's creating their bullish investment thesis, but also showing to us that India has a bullish investment thesis.
You need more insights. This stuff's of 2017.
This stuff's 2017, is it? I pulled this from the 2019 report. Where would you suggest 2019 insights for India? If you know.
Well, I don't know, but
Okay. So
GDP growth and consumption kind of question.
the what? The growth in consumption?
Yeah. So for them, it is a huge country.
Yeah.
I don't have enough information to say how much consumption they can actually generate.
Sure. The investment thesis or framework I'm developing in my head is that half of the population are below 25. Is that what? Well, first of all, do you agree with that data point?
I don't know anything about
Okay, so let's just assume that half of the population is below 25, and I'm looking at the demographic consumption habits. I just feel like it's there, like as they come into age, they're going to be consuming more.
Today's status is this, right? So the
If anyone knows like more,
GDP right now is about 2.5 trillion. They want to get it up to 5 trillion by 2020 to 2023.
yeah,
Right? So for that they have to grow at 8 to 10%. However, today, this quarter, they're growing less at around 5%. There's a slight slowdown coming in. People are saying we may not meet the 5 trillion, but nevertheless, they want to double to 5 trillion in the next 3 to 4 years.
well, we're talking about, those are GDP numbers. We're talking about the demographics here.
So
And
the demographics is what is going to help that. right?
Exactly.
So
And a cheaper dollar on the world as well, if that happens.
Well, the rupee is revalued, but now it is appreciating against dollar and stabilized. The biggest thing is the stable government which now got re-elected.
Yeah.
And that will give a 5-year
Yeah.
good stability for Asian economy. That is the most
Yeah.
important platform for.
Yeah.
to get
So
the
if I were to build my ideal economy infrastructure today, it'd be the regulation needs to be on point. The demographics are on point. The GDP existing track record numbers are on point. What else? Infrastructure, right? Not digital infrastructure as well as physical infrastructure, right?
Physical infrastructure is lagging behind,
Yeah.
and there's a concentrated effort to bring it up to par.
Yeah. So if you ask me, like, what are my own personal experiences in, meeting people in India online? I'm on LinkedIn quite a bit, right?
One more thing.
They always add me, just saying.
Have
they're
you heard
getting
about- Have you
active.
heard about Geo?
Geo?
Geo, the Reliance Geo. So they,
Ambani's.
Ambani, so they are coming up in the next month or two. They're coming up with internet service at 60 to 100 Mbps.
Oh,
Minimum.
okay. Yeah, I see what you, yeah.
At half the rate, I believe half the rate that we are paying here.
In fact, BSNL is going to offer fiber at 300 megabytes per second.
Right.
So I just got back from India 2 days ago.
Oh, did you?
Yeah.
Okay, so you've seen the
A
reality?
lot of changes.
Yeah.
In fact, my hometown, just 14 kilometers from my sister's place, that's where the bullet train is going to be. And I met one of the surveyors
Okay.
who lives in the same building.
So you have the most accurate data or most intuitive on, intuition on the data right now. Your insights are probably the best in here, I'd say. The other benefit is probably the trade war as well, right? The whole talk of going away from China into alternative emerging markets, emerging labor. So if we just power these younger Indian people with money and jobs, well, I think the incentives are there for them to consume, but it's also going to be like the greatest time frame for people in India, because it's going to be like, the party just started and they're deploying alcohol. They're going to, I think, I was going to talk about population growth, but maybe not.
Hey, actually, one of the things that people are missing is the transformation in India in last 3 years with this after effects of demonetization.
Yeah.
They have cleaned up their actually pipelines. A lot of noise was there. There was a parallel economy,
Yeah.
less digitization in economy and payments.
Yeah.
So a lot of people were doing cash. Government didn't have enough, coffers filled up. So I think with this demonetization, that parallel universe is getting demolished.
Yeah.
And I think the new government is putting regulations. So
Yep.
I think now investor will have better data.
Yep.
Because before every rupee that people spent,
Yeah.
actually 30 cents were never accounted for.
Yeah.
It was stuffed under the mattress, parallel economy exchanging hands.
Yeah.
Government didn't have anything.
Yeah.
So the digitization of the taxing infrastructure with Aadhaar card,
Yep.
which is like SSN over here, people getting actually at the upstairs, people getting view into where the businesses are. So I
Right.
think somebody made a comment on the chat here about auto sales going down. Obviously, people didn't have what we call it over there black money,
Yeah.
right, which was fueling a lot of auto growth.
Yeah.
I think it's going to come back in a real way. So
Yeah.
now people can actually be buying it with their white money,
Yeah.
which is what the
So-
opposite
Yeah.
of that.
So-
I think it's
So
going to.
basically, the fluff of the economy has been what,
Yeah.
the last 3 years, and now it is on a more stable ground
Yeah.
to actually take off for better.
Yeah, and keep in mind as well, like, whenever I think about an investment thesis, right, I always verify with a billionaire money manager. So guys like Ray Dalio or Stanley Druckenmiller or another one, I forgot the other one in my mind, but they got some big positions in emerging market ETFs. So they're extremely bullish on this segment. But what do I know, right? I'm just looking at what the bigger people do, or the people who control a lot of funds. The other thing I wanted to add, based off of we were talking about emerging markets and data, right? If you I'd say I'm decent with software. When I look at software today, right? It's the way I see there's consumer internet software and then enterprise software. Enterprise software and VCs are focused on the sales momentum. But when I look at consumer internet software like a Yelp or Facebook or LinkedIn, it's not even about sales. It's about, if you watch The Social Network, the movie with Mark Zuckerberg, it's all about the users, right? And when I think about the world today, data, the new infrastructure, digitization, digital transformation, whatever, where does the majority of the users stand in the world? India and China, right? So this might be the technology tends to disrupt things like crazy, okay? If they're going to devalue currencies, this is probably not something we play anymore. If you ask a millennial today, not a millennial, Generation Z, what do they care about? Do they ask you what college degree you got? No, they're going to ask you how many followers you got on YouTube.
Yes.
This is the new social infrastructure no one's paying attention to, right? They're going to ask those questions. So when I think about users and just sheer amounts, I'm going to invest in whatever consumer internet software that's in China, like IKEA, is that right? IQ, yeah, oh, I said it all wrong. Yeah, so because that thing has 600 million users. How many people are the population in the USA? 350 million. This already has double the users of the USA population, right? So this is some substantial stuff. Because I know software pretty well, I feel, that it's not a money game, it's a user game. And how many users you get on will solidify your position. Why does Uber and Lyft not make any money? Because it's a freaking numbers game. Right? We're gonna look at Uber today. If you look at Uber and they got the different products out there, they talk about, okay, Uber rides, Uber transportation, whatever, right? But there's Uber Elevate, which is Uber Air, and then there's Uber Health, Uber Business. You see what they're doing? They're not just going for a freaking transportation broker, digital broker play. They're trying to broker everything, right? And it's all about the users because that's how you rank up your application in the App Store, let's say. It's all about the users. Now, we know that's the case, and there's going to be a lot of money deployed into application infrastructure. So a lot of excitement to come. But just have to figure out how to capitalize and just get calibrate your investment position. So 600 million of 1.3 billion people in India. Indian household earnings, 8,500 per year, right? 10% CAGR. Video screens in India. So 2018 today, 550 million video active smartphones and then TV screens. This is the numbers that are going to be deployed, right? So that's a hardware deployment, let's say, but then what's the software benefit for the software companies? So I think there's a company called, is it Hotstar or? Hotstart? Yeah, it's huge, right? There's a lot of users. So Disney owns that. So Disney owns that, and it's huge. Yeah. So when I when I look at the so this is where we're building the investment thesis for Disney, right? So Disney's looking really bullish. Why is it bullish? Why is someone deploying billions of dollars into this chart move, right? That's the thing about trading as well. For people who are inexperienced in trading, they see like a huge move in Disney. They're like, oh, it moved a few dollars. Dude, this is like billions of dollars that just moved, right? And so, I can see why investors are extremely bullish on Disney. High quality, great content, blue chip, historically proven track record, world-class management. Now penetrating, India with Hotstar. Is it Hotstar or Hotstar? Hotstar, yeah. Are you on that?
Yeah.
Yeah.
That's majority of Indian Netflix. Is the Indian Netflix.
Yeah. Man, some days with the amount of Indian people I know now, some days I feel like I might just be Indian. No joke.
You know what?
I know how to cook Indian food.
You are the third person I heard in last 1 week. Like, I wish I could be Indian.
Your emerging market economy is going to be very strong in the next decade. There's going to be a lot of international trade between India and US, I feel. The demographic profile is awesome. A lot of technologies kind of originated. I mean, a lot of the Indian leaders here, if you really look at behind the scenes here in Silicon Valley, a lot of the tech executives are Indian.
Yeah, it's actually gone up significantly
Yeah.
over the last 15 years.
Yeah, you guys are well positioned as a population. You are well positioned to capitalize on the economic situation. Talk about total collective capitalization.
Actually, if you look at per capita,
Yeah.
we are probably at the top.
Yeah. Okay. Before we get into the race stuff, it's a dangerous conversation, but let's kind of continue over here. Video screens in India. What's this one? Minimum $ per gigabyte cost for wireless data. Look at the cost on India.
Wow.
So it doesn't cost them that much to get exposure to this, right? So this is a prime environment for Indian stocks, if you could find any in the U.S. markets. But Disney has exposure to India at scale with a great product. Average Indian per capita data usage per month, MB, is that 9 gigs? If I read that right, by 2018?
Yeah. I think so.
That's a lot, huh? Gotta be like live streaming
Lots of videos.
HD and 4K stuff. That has to be because I mean, as a household, I think I'm only at 1 to 2. It's like 9 per individual. So does that kind of tells you are they living online? I mean, living online is very real these days, right? And we're gonna look at the millennial generation because I have a Goldman Sachs report on millennials as well. I might skip ahead around the stocks to talk about that millennial part after this. Average Indian hours of video content per person per day, 5 hours by 2023. Currently 2.5. So they think it's going to double. People are going to watch more movies. So think about it. If the crowd's gonna focus on consuming digital content, and if you have a business, you want to market, I think your absorption for your marketing will be better on a digital platform, right? More money's gonna go into digital marketing, let's say.
Could I comment on that from what my experience is? The
Sure.
penetration of internet in India is not that great.
The what? I'm sorry.
Penetration of India of internet in India is not that great.
Mhm.
So I'm a bit surprised by those numbers.
Well, there's the smartphones now. If you see smartphones are there, now it's increasing. Even in a remote place, I think very well could be the data usage now because everyone is using internet on their smartphones now.
So what I could understand is the graph. This shows consumption of people who have access versus total number of people that are there. That could be
So
significant.
actually both are going up. So I think if you see the number of players who actually provide internet in India, non-metro, is also growing, government and private. So I think there is a three-pronged approach that in India that is happening. Government is laying more cable like MTNL that other gentleman was talking about earlier, which is like a government entity. We have a lot of private providers getting in there, and we also have like third and fourth tier private providers, mom-pop shops. If you compare with MTNL and AT&Ts of the world, they are also laying groundwork. So I think what we are talking about is it's just getting started. And if I
Right.
can,
That's what I would see from those graphs. It's getting started, but it shows huge consumption already.
yep. And actually, I'll tell you, like 10 years back when I was visiting India, BSNL, they actually laid a lot of groundwork in tier 2 cities. So this output is of that. And what I'm talking about will be next 5 years, you will see this output actually more than double.
But I think what you're talking about is the fibers, right? But I think what is happening now is smartphone usage because of
Yes.
Geo. What is
Yeah.
happening is everyone is using personal hotspot.
Yes.
No one is really using fiber anymore. So I think that usage now probably you see has exponentially increased.
Yeah, the wireless, the world is
Yes.
exploding.
Yes.
And it's easy to lay as well. And India is actually a smaller geographic country.
Yeah.
If you scroll up your chart, if you actually look at China, US, Philippines, and India,
Yeah.
the reason why your cost is going down is because India has a smaller landmass and 1.3 billion people in it.
Population density is
Yeah.
much higher.
Yeah.
than
So
the-
from if I'm a software investor and I'm doing consumer internet, that's like my prime location.
Exactly.
Because it's just like I could get everyone on one software like really quick. It'd be frictionless. Versus here, I have to like go to different major cities just to get whatever connections, right? So I think it's weird. I think technology is making. I mean, with the dollar or the currency devaluation and technology advancement, is making money less and less important. It's more about how many followers you have these days, which I really hate to say that because it's Generation Z got one up us on that. They really did. I also want to say people online. So there's like 30 people online. I do apologize. I can't really. The size of the room and there's 30 people online. I can't really engage both ways effectively anymore. So you guys are more of observers. So I'm sorry. I'm sorry for people online. You're welcome to come in person and meet me. I don't mind that. Let's see. We already talked about this one. So average content consumption assumed to double in 5 years, let's say. I could tell that the gentleman in the back is a very conservative and hardcore, high analytic investor. Huh? I'm just kidding. Let's look at this other ETF right here, VNM, so Vietnam, right? So we were talking about a few weeks back about the whole trade war. If Trump says, move out of China because of the situation, then we were just kind of thinking about the next logical step or location. So we were thinking Vietnam. So if you want exposure to Vietnam emerging markets, more direct exposure, VNM. The other one was INDA, which is India. We're going to look at a few more emerging markets, and then we're going to go into millennials and into stocks. So looking at Asher, so Shanghai Index. The Shanghai Index is recovering, it kind of looks like it. So I think emerging markets might be in play, depending on how things go. Naveed, we have a chair right here, if you want. Okay. FXI. So this is if you want to invest in China, but you want the more quality China A shares, this would be it right here, FXI. So it's an ETF that holds like the blue chips of China. That's the one I'm looking at to maybe go some calls on, depending on the situation. Anyways, looking at precious metals. So a little update on precious metals. Gold is sort of breaking that trend line that I drew right there. So I'm looking at the next anticipated downside move in gold. One is the 50-day moving average, and then after that, I'll be looking at 1450 as a potential next. To me, I don't mind because it's a opportunity to size back in, right? So the thing about investing, you gotta understand that, yes, if the investment thesis is bullish, long term, short run, anything could happen. So you kind of have to understand the short run, it needs to cool off a little bit. Same thing with silver. I think silver cooled off quite a bit. I had to cut my losses because I tried to position heavy back in, but it doesn't seem ready. So this is where I'm anticipating the next potential stop. So $17 if 17.50 doesn't hold. So the next 50 cents down. But I'm still bullish on it overall from a 5 to 10 year perspective. Looking at oil, so I know we had that news right here. So I think by now you guys all saw it because technology is pretty advanced. Saudi Arabia oil facilities ablaze after drone strikes. This is right before the talks about IPO of the biggest company in the world, right, Aramco. We'll see how it goes. This type of news, it's event driven. So in trading, there's different forms of trading or investing, right? There's global macro investing, there's value investing, momentum investing. Well, this would be an example of event driven trading or investing. Looking over at the next stuff, cryptocurrency. So I'm just going to speak briefly about this. We talked about this chart last week. So this is my wave theory anticipation on Bitcoin. It is building up a symmetrical triangle, which is typically the consolidation before a next explosive move. So I'm anticipating an explosive move to the upside just because the theme right now appears to be sovereign's lack of direction around the world. And again, to me, it's mathematically bullish, it's demographically bullish. Demographic because millennials need a chance to participate in some upside, and they know about Bitcoin more than gold. Well, I'm classified as a millennial, but I think you guys would classify me different after coming to this investment club. So majority of my friends know more about Bitcoin than they do about gold. So
there's a lot of talk about ETFs being formed for Bitcoin. So
the only one that I know is GBTC.
I thought there's another one that's more legitimate through Fidelity or other that's starting.
GBTC is the most legitimate that I know in the markets right now. Now, this is all for educational purposes only, all right, guys? But that's a way, I think that's the best way for an older profile investor to get some exposure, because I don't think you would want to deal it through like a Coinbase broker.
But I thought that ETF had high costs though, like in terms of the spread of what you're paying for what they.
Well, yeah, that's typical in a low volume market. Any low volume market will always have a thick spread. But for this GBTC, I don't think the spread's that big.
No, I think the news was that there's the formation of another ETF that's got more reasonable cost structure.
Sure.
Obviously the spread.
Well, there is demand for this. So obviously these financial engineers will engineer the next product.
So the thought would be if there's if one ETF gets formed, then another one gets formed. If a whole bunch of those got
and
formed,
they buy the actual Bitcoin. Think about that.
Well, they load up with whatever it is.
Yeah.
But I mean, that could be the spark for what creates a lot of demand of people like me that are not going to go to Coinbase.
Exactly.
But if I'm going to buy anything, it would be through an ETF. Period.
Yeah.
Because I trust Fidelity more than Coinbase. Let's say.
Yeah.
So I
trust Coinbase because it's Andreessen Horowitz has an investment position in Coinbase. If anything, they'll hurt the reputation if this one doesn't hold up. They are prone to security hacks because they don't have the the regular or the years of firewall development. But I think it's that sort of risk you got to take because look, people tell me like, hey, it's like $10,000 a unit. Well, I tell them, what's $10,000 a unit when if you think about the risk reward of like being like 1% of the world. I know it's very like dreamy, right? But hey, I mean, I gotta maybe sometimes Kay likes to gamble a little bit, maybe, but it's mathematically bullish, demographically bullish. The setup, the technical pattern looks pretty bullish. Technology-wise, the community's there. It's globally known, right? If you understand marketing, start your own business, it's very hard to get your name out, unless you do like I don't know, like unless you're an Uber and you get everyone to use it somehow really quick. But getting your name out there is very difficult. And so I think in times of stress and fear around the world, people will run to a few defined asset classes, and this has the characteristics of gold. So that's my thesis on that. I wouldn't recommend everyone play it if you have the funds to, but I want exposure to this because I perceive I'm a risk reward guy, right? The risk to me is risk $10,000. What's $10,000 when you have the potential to be, mathematically 1% of the world? It's insane, but I'm not looking to be 1%. I wouldn't mind like capitalizing a little bit, but we'll see. So that's my take on Bitcoin. There's so much now that I just like. It's another cryptocurrency, right?
ETF.
Oh, it's ETF. Oh, is it?
Coin.
Oh, I didn't know that. Okay, KOIN. Okay, real cool. Thanks for sharing that. Look at some of the business cycles real quick. U.S. PMI. So these are updated charts I wanted to share with you guys. So we already know this, but PMI is below 50. typically this is like that econ recessionary indicator. So again, remember, things are kind of tough on the back end or under the hood for the global markets. Looking over here, this is the global PMIs, right? So you see the lowest 143. Anything below 50 is in a recession, right? So Germany's already in a recession. And Germany's a tier 1 economy. So think about that. So while the rest of the world, right, stocks are 1% from all-time highs, if we're 1% from all-time highs, why are we printing money? Because underneath the economy is actually pretty weak.
So if the German economy's gone to the ground, are there companies in Germany that you believe now have been impacted more than they should have been? In other words, not Mercedes or others, but like some German manufacturing company that happens to have a rock solid product, but the stock's down 50% because the whole country's taken them all in. Or have you looked at anything like that?
Well, let's take a look. So let's go to...
Well, any of them. I mean, is there one that's...
So what I did just now is I've organized it from the biggest players down to the smallest players, right?
Okay.
So we're gonna look at it right here and go this way if I recall. Wait, let me make sure if it's that way. I'm not sure if it's left or right or...
So what I mean is, are there fundamentally
Yes.
strong companies that are stuck
So-
in a country that's gone to the ground?
Yeah.
That when the country turns around, those companies will be back to where their valuation should be.
Sure. So these are the only ETFs that we have exposure to in terms of ADR, American Depository Receipts, meaning these are German companies traded in USA, right? This is all I have for now.
Okay.
If you want more German stocks, then you need to get into German brokerage and get access to
But
that.
you get the point I'm making though, right?
Yeah.
There
So can we identify any beat down ones? So I would like to start up here. DB, FMS, and MOR. It looks okay, but TRVG. So let's just look at those three and see like how beat down they are. And if you believe in Germany, which is pretty good. This is medical. Let's see. Let's open up these three. And Jumia. No. Why is that? Jumia Technologies is here? No. That's African, right? Yeah. I won't look at that one. So here's one. This is categorized in healthcare, specialized in health services. Trading at a 1.63 book value, and PE's in the green. So relatively price, it's pretty beat down. So if you believe in a comeback,
It's not because of the economy, it's because of the U.S. medical policy.
Mhm.
This is the biggest kidney dialysis.
Yeah.
So what you're saying, you have to research companies. You can't just bet on a graph.
Yeah,
If you
you
think
can't.
there are companies that have got fundamentally strong entities, like not Deutsche Bank, which
Yeah,
has
you
been
can't do
with
Deutsche
us
Bank.
for a year.
More than 70% of their revenue comes from U.S., not from Germany.
Yeah. So
Right.
again,
Yeah,
this
it's the biggest,
again. So this is only us setting up like, okay, we know Germany is in recession. That
Right.
sets up the bigger picture. Now we have to really zoom in and look at each security. There's due diligence behind that.
Absolutely.
You can't just throw money like
What
that.
I'm saying is that, if you look at companies though that are fairly strong but have been impacted more than they should have been, which is
Yeah.
exactly what happened in October of last year, when companies lost 50% of their value and then bounced back up 50%, or actually higher than they've ever been, even though they shouldn't have gone down. The tide knocked out half of them. So if you looked at any companies in Germany that the recession's not going to be forever.
Yeah.
That if you could get another rebound on those ones that probably shouldn't have gone down as much
Sure.
as they
Sure.
did.
Sure. So investment thesis wise, Germany is cheap.
Right. Exactly.
Right.
Exactly.
SAP. I like SAP. SAP is gonna be a monster of a company. It's the only one that's really competing with Oracle and Salesforce, really.
Right.
So it's a monster of an enterprise company. I used to think the guy was like pretty this CEO wears shades, right? I'm like, wow, this guy's kind of like whoa, but it turns out he actually got he got an injury, and so I was like, oh okay. I thought he was just like wealthy, and he's just like I'm too cool for this, and but I didn't know the story. But it's a world class organization, and that's a blue chip. That's a global blue chip.
Right.
What I want to point out here is just like the majority of the trend, right, in the PMIs around the world. Majority is down. So this is why if you ask yourself, why are we lowering interest rates when stocks are going up? Well, the underneath the hood is not that great. I'm gonna skip this one because of time over here, but just show you that unemployment has it's still momentum to the downside, meaning people are still working. So there's not much unemployment, which is good. USA building permits. So from a U.S. macro level, or not really true macro level, but from a USA perspective, national perspective, building permits are kind of consolidating to the downside, meaning not that many commercial real estate developers are going to the city asking for permits to build up a new, mixed-use commercial real estate center. I love those centers. You guys know what mixed use are? Mixed use is when there's retail, office, and residential, like living. So it's like a park to like play, eat, do work, hang out. Something like a Santana Row. Yeah. So that's pretty much it for the business cycle analysis. Now, I want to talk about ENPH, but I'm going to hold off to the end because I want to zoom down and move to, we're going to skip uranium, even Cloudflare because of timing. But I want to go over to the millennial segment to kind of share with you, I think this is more interesting. Real quick though, this is Uber's white paper, right? And they talk about turning these, these roundabouts right here? Mm-hmm. You know how like it's just like a complete like, lack of usage on space? Because it's just like nothing, right? They're talking about turning it into like helicopter pads for Uber Air. Wow. So think about the future, the potential of the future, right? It's pretty dynamic. But I always thought about that, and I'm thinking like, could people potentially build a home there?
It's probably gonna build data centers in there.
Seriously.
Why not? I mean, it's a waste of space.
No, well, data centers might need access to water, so it might not be sufficient. Huh? Parking lots? Man, that's where you gonna go?
Yeah.
Park there.
Roundabouts are actually near the retail centers. Like basically, you are trying to get off of a busy highway into getting to the retail space, and that's what you don't find parking lots.
I'm sure commercial real estate developers are like, why don't we just buy this round patch of land? We could do something with it.
Top of like VCs or some malls as well.
Yeah, so you guys are welcome to download the Uber white paper, but they have a sort of a dream, right? Turning roofs into parking spaces for, airplanes and all that. Maybe one day, but let's see. Oh man, we're gonna skip the Disney one too. I wanted to share that with you. Okay, I apologize, guys. The timing, I guess. We're gonna look at the Goldman Sachs report and then do, time manage whatever time I have left. So this report's pretty interesting. I wanted to go through it because we've been talking a lot about just social demographics and how to bet money on the changing demographic landscape, right? So I'm gonna read some stuff to you and we're gonna look through it because I found it super interesting. So millennials, coming of age. One of the largest generations in history is about to move into its prime spending years. Millennials are poised to reshape the economy. Their unique experiences will change the ways we buy and sell, forcing companies to examine how they do business for decades to come. Right? If you understand how millennials think, then I think you find some decent opportunities. So who are they? A different world, a different worldview. Millennials have grown up in a time of rapid change, giving them a set of priorities and expectations sharply different from the previous generations. So born between 1980 and 2000. Again, this is Goldman Sachs research, right? So what's the structure of it look like? So we got millennials right here, and then we got Generation X right here, and then we got baby boomers right here. So, so this part's kind of self-explanatory. But baby boomer is 77 million, Generation X is 61 million, and then millennials 92 million. Interesting stuff, huh? The millennial generation is the biggest in history, even bigger than the baby boomers. And there's some, this is going to move to the right one day, and then we're going to see Generation Z. Millennials have grown up with the internet and smartphones in an always-on digital world, right? So playing video games, they kind of top that. Using messages and chat, they top that. Downloading music and video, they also top that. Social media, they kind of top that, but Generation X is just as active on there. And watch TV online. So this goes into the whole like streaming opportunity, right? If Netflix or Hulu, you guys know Hulu's owned by Disney? Yeah, so that's another one of their plays right there.
Or is it like some stake?
Is it what?
Is it some stake?
I don't know. I think they bought them out because I looked up on Crunchbase. It says undisclosed, but it said acquired by Disney Technologies. Social and connected. The online world and social media in particular have given the millennials a platform to reach the world, right? So this is the habits of the different generations. So as you can see, millennials are more active on text messaging, social media, instant messaging, and blogging. So I guess maybe for those of you who have kids that are millennials, you want to understand them better. This is a great way, right? So this is the boomers activity in terms of like texting and social media and all that. And then this is Generation X, 32%, 25%, 19%. You see how active millennials are? I can only forecast Generation Z to be even more active. And I feel that way because some of them are just pursuing these digital real estate asset classes that are emerging that no one's really seeing. So there's massive opportunity there. for those of you who want to know how to sell, right? Get in front of a camera, speak, build a community, and then put advertisements or whatever. Massive opportunity. Even sell to India, right? Because there's a massive consumption happening. You just have to.
There's a website which has come up which actually allows you to buy and sell real estate online, and you can actually do that worldwide anywhere.
I mean, there's a lot of stuff coming. So it's just disrupting the way of life. And I'm thinking very critically because I know for a fact that if I read anything on the internet now, I don't think, not even 10%, I'd say less than 5% is content I would want to read on the internet now. Like, it's just something that I've come to be more mature about myself and realize, like, 95% of the internet is just content that's being reshared at some core. And I'm looking for that core. It's just really 5% content developer originated, and then it's all distributed in different forms and languages and messages. So in a sense, you kind of know, the majority of the internet looks like. I didn't have to go deep internet hunting anymore. There is such a thing, by the way. Less money to spend. So millennials have less money to spend, lower employment levels, and smaller incomes have left younger millennials with less money than previous generations. Student loan payments are taking up a growing chunk of postgraduate millennials' income. So I am seeing emerging businesses that are coming out, cold calling millennials, because I get those cold calls myself, talking about student debt, but it seems like the average is like 20 grand. Different priorities. With less to spend, they're putting off commitments like marriage and home ownerships. So this is how we understand a generation. Housing. As millennials enter their peak home buying years, their reluctance to enter the housing market could change. The cohort's sheer size plus its desire to settle down in the future could lead to a surge in home sales, right? As a real estate owner, you got to think about that marginal buyer for prices to sustain to the upside. Peak home buying years from 25 to 45. Snug in the nest. A growing number of millennials are choosing to live at home with parents. So that would be since 2005. Today is about almost 30%. So I wouldn't say much of a change, but waiting to fly. An overwhelming percentage of millennials say they want to own a home sometime in the future, right? 93%, ages 18 to 34. Love and marriage. Millennials have been putting off significant milestones like marriage and children, but that doesn't mean they want to stay single forever. So in 2010, I didn't know the average was 30, right? And in 1970, the average was 23. Is that true? I mean, these are numbers, so.
It's US, right?
Yeah, it's US. It should be US. If it's international, that'd be cool too. Marriage can wait. The percentage of young people married and living on their own has dropped by more than 50% since the 1960s. Let's see, putting off parenthood. Millennials aren't just putting off marriage, they're also waiting longer to have children. This is what we observe, right? Like tighter economic situations across the nation or the world. I would even say this is pretty common with people in like Hong Kong and Singapore. I've talked to some millennials there. They all feel the same way. It seems that no matter wherever you go and travel, all the desires of the average human being is all the same. I just want success for myself, my family, a roof over my head, a nice car, and just a good job. So those are things that I think about as like I think of up the structure, right? From everything from consumer to enterprise to sovereigns. I realize like I don't want to be at the sovereign levels. I think my people at the end of the day are just basic genuine consumers out there. So again, going back to the 3 type of conversations that you experience out there, right? One is the very primitive type of conversation who are more selfish driven type of conversations. Then there's the majority or genuine type of conversation where people are just it's not selfish, it's selfless. They talk about other things. And then the tier 3 conversation is the more advanced civilized conversation where you go deep into your thoughts. And I forgot who I was talking to this week, but if you think about it, there's a horizontal way of speaking and a vertical way of speaking. The horizontal way of speaking is like you talk about broad topics, but you never go deep. And then there's the vertical speaking where you just go deep into one topic. And now I'm saying I like to be the diagonal speaker. Yeah. Never say never. Millennials may be putting it off, but polls have shown that they do want to have their own families someday. I think it's just the economics are just pushing that time frame out. As you can see with the marriage numbers, right? Access, not ownership. So this is actually pretty interesting. I think the next generation and the way technology is changing everything, it might be more of a rental economy of the future versus like an ownership, right? Where you own real estate. It's not just homes. Millennials have been reluctant to buy items such as cars, music, and luxury goods. Instead, they're turning to a new set of services that provide access to products without the burdens of ownership, giving rise to what's being called a sharing economy. 25 years from now, car sharing will be the norm. This is in bold. Car sharing will be the norm. And car ownership, an anomaly. That's insane, because if you think about it today, whenever I go out to any retail center, what I think about is I look at a parking lot, and these are cars, and these cars are assets that are not being, if they're an asset, shouldn't they be put to productive use, right? So I think with technology, again, it could be get to a situation where you could rent your car out as you go and have fun at a commercial mixed-use real estate center. And if that's the case, then I think the future of commercial real estate development will be disrupted as well, because you will no longer need parking space. If you don't need parking space, then you could really squeeze out more performance, right? Because you have more space for not unproductive assets like parking lots, but you have space for, I don't know, more food, more shopping. So I do see a very optimistic future, and I think millennials are going to spearhead that. I don't know who yet, but maybe I should do something like that. That'd be pretty cool.
So what other domains do you think the sharing will?
The share,
Housing, we already spoke.
software's bleeding into everything.
I see, like in terms of the domains, like car sharing is one, that is transportation, housing, Airbnb.
Everything.
Will be stagnant.
And I think the real question is, what industry will it not bleed into? That's the real question.
And making people share cubicles in office now.
I mean, my sponsors, Common Grounds, Workplace as a Service, that's pretty real, right? Where people don't have to subscribe to the whole entire commercial real estate unit, but just a portion of it in a shorter period of time. Technology is really changing everything. We have to pay attention to it. The hierarchy of needs. Should I skip this? Yeah, I'm going to skip this a little bit. It's just saying like cars is not something as important. A growing percentage of older millennials are choosing to rent, not buy, about 60% compared to 52% in 2005. Brands and retail, so their shopping habits. Millennials' affinity for technology is reshaping the retail space. With product information, reviews, and price comparisons at their fingertips, millennials are turning to brands that can offer maximum convenience at the lowest cost. Right? They're more savvy. That's like anything that would happen if you give consumers more information. They become more savvy about it. When marketing to millennials, a strong brand isn't enough to lock in sales. It's just a survey. I won't read that. Again, guys, I am moving a little bit quickly here because I do want to get you guys out maybe at 12:15. And also want to announce that is today your final week? No. Damn. Okay, so P. Shang, very nice guy. I met him at technical discussion today's number 132, so I met him at number 20-something. And I promised him that we're going to have lunch before he goes, so it's going to be his last day today. No tears, okay?
Last day because?
He's moving out of state.
Oh, okay.
Yeah, he's going somewhere else. So I was thinking we'd just go across the street. We could eat at like Pacific Catch or anything, but anyone's welcome to join.
But he'll be joining online, right?
Yeah, sure, man. Yeah, you could join online too. I'll bust out the go-to meeting. So
Right.
yeah, with that, I'm gonna try and end it at 12 here. And I do apologize. We didn't get into the Disney analysis, but if you message me, I'll send you the Disney Investor Day report. But what I've been doing is that we've been talking so much in the last several sessions. I've been kicking back the content to like the next week. So it seems that way today. Good session, but. Yeah, I'm gonna finish this and then we'll go have lunch with whoever wants to join.
Just by the way, Disney's been written up about 4 times in Barron's over the last half year about why it's one of the best stocks to own.
In the last half year, right?
Absolutely.
I know you like that stuff, so I want to do a quick analysis for you real quick. Let's do this. So Disney looks attractive to me, right? Hey, you're welcome, Raj. Thanks so much for coming. This is Disney right here. So this is why I want to say that it looked exactly like the Amazon before. When Amazon was $300 or $600. I think it was probably $600. It just consolidated like this for several years. Look at how many years this is. Is that like 5 years? For almost 5 years, it just went sideways. And the moment it broke out that 5-year consolidation, that's like gold, right? I saw Amazon go from 600 to 2,000. So this is that same type of chart that I saw years and years ago because that was back in 2013. Let's see if I'm right on that. 2013. Okay, maybe it was some time frame over here. The charts are all crunched, right? So it's harder to see. But actually, yeah, it was 2013. It was this period right here where Amazon just went sideways. If you zoom in, right, if I had the actual charts today, which I probably do on Thinkorswim, if you zoom in right here, in reality, it would actually look like this. Like for the longest time. Just for the longest time. And then the moment it broke 400 or whatever, new highs, which is what I'm seeing with Disney, it went from 400 all the way to 1800. So 4x, if you will. I'm seeing that the same with Disney right now. I think they have a lot of confidence, and I think they own Hotstar and stuff. Even though the valuations are kind of stretched for Disney, I think they just tapped into, or they convinced investors that there's substantial growth opportunity. At least the charts are communicating that to me. The only thing that could really slow this down or hit this hard is probably a global macro event. But in that event, everything's going down. So that's my quick thesis on Disney. I did want to review it, but we sort of ran out of time. If I could finish this millennial thing real quick. Do you guys find the millennial part interesting? Or is it like, Okay. I'm gonna use this one, the one that I took the highlights of, and we're gonna finish it right here. The power of social. If brands are shrinking in importance, social media is growing. Millennials are turning to online networks when making purchasing decisions. Remember, it's not about what college degree you got. It's about how many followers you got. And I'm starting to hear that a lot. It's a big trend. Wellness, as we also talked last week about the China's social situation, right? There's Chinese influencer incubators. There's startup incubators here. Now we have Chinese influencer incubators, where they train the influencer to speak to a camera, be confident, make it entertaining, and they will own they'll profit share on that. They'll own your equity. So that's happening in China. One observation about millennials, they're more health conscious, more fit driven. They're all about working out and stuff. 83% compared to 69%. And I'm just gonna finish it right here, and we'll call that 12. The takeaway, the millennial generation is the largest in US history, and as they reach their prime working and spending years, their impact on the economy is going to be huge, right? Millennials have come of age during a time of technological change, globalization, and economic disruption. That's given them a different set of behaviors and experiences than their parents. They have been slower to marry and move out on their own, and have shown different attitudes to ownership that have helped spawn what's being called a sharing economy. They are the people engine of the sharing or the gig economy. They're also the first generation of digital natives, and their affinity for technology helps shape how they shop. They are used to instant access to price comparisons, product information, and peer reviews. Finally, they are dedicated to wellness, devoting time and money to exercising and eating right. Their active lifestyle influences trends in everything from food and drink to fashion. These are just some of the trends that will shape the new millennial economy.
How are their views on vaping?
On vaping, man, that's crazy, right? Oh my God, I don't do any of that, so it's not my thing. But yeah, guys, we're gonna call it here. I do apologize for not going through the Disney analysis. It was pretty interesting, but I'm gonna kick it back to next week. Enjoyed the discussion with you guys today. I think it's always productive. Whatever content we didn't go over, we're gonna circle back. But I'm gonna go have lunch, the last lunch with P. Shang over here. Anyone's welcome to join. We're gonna be across the street.
Did you talk about the WeWork IPO?
I didn't talk about the WeWork IPO just because it looks very unattractive. It's more, to me, it's probably more. The bankers are stressing WeWork to put it off because the valuations is just driving up, and that's what you get for playing a high valuations game, right? SoftBank betting, their betting style is like an ecosystem better, not so much a individual security better. So they're playing as though they're offsetting required investment due diligence by just owning up the ecosystem. But I think it's going to hurt them in a tight environment that we have today.
Okay, one last quick one.
Sure.
So Apple's announcements, all the news about the Apple TV. So how significant in terms of having any impact on any of the other streaming companies?
Apple TV, you're talking about the software portion, not the hardware.
I don't even know what it barely even is, but I mean, it sounds like it's got some momentum, but I don't think the people at Netflix are wetting their pants because of this whole thing. So I sense that.
It's all. I mean, if it's the software streaming stuff, it's all about content.
Right.
And content is its own animal, right? You look at Netflix's gross margins. It's not that great, but they're software. But it's because they're trying to own their content.
Right.
There is one big gap. I won't say big or small, but there's another gap that both Apple and Amazon have a piece of hardware. So they control both the streaming content as well as the hardware.
Mm-hmm.
But tomorrow if Apple shuts off Netflix on their Apple TV, let's
Right.
say, then it's a big risk for Netflix. So Netflix ideally need to buy a hardware piece like a Roku.
Yeah, I'll give you an example. You know, like for example, like this community is growing kind of big, right? So the tree guy comes in, hunting for deals.
Right.
That's the example of using another person's infrastructure.
Absolutely.
I'm kidding. I'm joking. He's not here, but yeah.
That might be why.
So something to think
Yeah.
about.
So Roku has a play now.
You need a
in that
device to
sense.
distribute the content.
Yeah,
And
yeah,
Netflix right now is dependent on everyone else to distribute.
Yeah, that makes a lot of sense for Roku now. I for the longest time I've been having a hard, time grasping the concept or investment thesis of Roku, but now I get it because of this massive content of digital content. It needs forms of distribution, and it's typically through
But
something
that
like Roku.
would also mean that Netflix profitability may get impacted, but because now they will have a hardware piece,
Yeah,
will have its
yeah.
own cost.
So would the winner be Roku then? I mean, another Silicon Valley company.
It could be Roku.
That's
It could be
Might get acquired, right?
Yeah.
You gotta remember the other side of that though, and I don't know when that's gonna come, is from a consumer perspective, you've got now another 2, 3, 4 providers that are
Yeah.
charging for content
Yeah.
that you have to pay a monthly fee for.
So we're over. It's the best environment for us, but we're overloaded with decisions. So we might get decision fatigue. For me to capitalize on that, I'm gonna go write blogs or YouTube videos on how to pick what to watch on a Friday night. There's gonna be demand for that. That's the way to play the economics, right?
There you go.
What to watch on a Friday night.
One thing you said earlier is that, if you get late to the dance, you should have got in early, right? So September is the time when people in October start to think, what companies are gonna do well during the Christmas season? So if you bet right, in October, November, people are gonna say, well, Target and Walmart and Apple and all these other companies that did amazing last year
Yeah.
have the possibility of having their best Christmas ever,
Right.
or the economy goes to hell and they all go really bad.
Right.
But if you really were to bet right, if you really think Apple did well with their iPhone 11 and the watch and the whatever, you could outguess the market now and suggest that they'll have another amazing best holiday ever, and suddenly they're the biggest successful company in history. I mean, so place your bets now if you really think
They
that.
have. I mean, if anything, we have the world regulators all for that right now.
Yeah.
All the sovereigns in the world want that right now, and they're willing to put down their reputation for it. And they are. This is a destruction of global trust, really, because we're just devaluing currencies. And trust is not something that's built in one day. It's time. So we'll see how it goes.
Yeah,
You know?
absolutely.
All right, guys. I'm going to take Pishang to go out and eat. You guys are welcome to join, chit chat. But hey, thank you. Yeah, thank you. Let's see. Hey, Doris, thank you. So sorry.